Welcome to the European market open, everyone. A minute to go until the start of cash equity trading in Francine-Lacqua here in London. And these are your top stories. Stocks rally as investors downplay the prospect of higher Fed rates while we look ahead to the jobless claims out later today for further signals. Standard Chartered announces a $1 billion buyback while Commerzbank lists its full-year profit guidance. Plus, production snarls while Airbus delays targets to ramp up output of its best-selling A320 jetliner as it wrestles with parts shortages. So, good morning, everyone. Let's take a look at the futures. It's going to be an interesting day. We not only look at some of the data out of the U.S., we have a bit of data here in Europe, and of course, we look at the UK politics story very closely. When you look at equity futures here in Europe, but also in the U.S., it's a good indication of certainly how the day starts. Look, there are actually investors appearing to shrug off some of the prospects of higher interest rates following strong economic data from the U.S. If you look at dollar, in fact, and we will see it in the cross-asset check very shortly. If you look at dollar, we've seen that gaining against G10 currencies, yen also strengthening. So we look at commodities, we'll have a full roundup, of course, of the energy complex in the next hour or so. Brent crude currently at 85.95. I have the European equity indices just opening right now, and it's very clear that the market could be telling us at this moment that if we can keep going as long as inflation is coming down overall and growth is solid, then it could see continuing seeing that rise in a lot of equities. Euro 107.07 against the dollar. Also look at British pound 120.48. We'll spend a good amount of time today actually talking about politics. Also in Scotland, we have an interesting interview that may not be market moving. But again, if you look at the complexities in the UK and certainly the voice on independence on Scotland, that could increase or decrease in the next couple of quarters. Right, let's also get to treasuries. So this is our cross assets. The data really that we're expecting today follow that hotter than expected inflation print on Tuesday. I don't need to remind you because everyone is very well on top of that. And then we look, of course, at some of the opening and reopening in China and what that means also for inflationary pressures. The U.S. 10-year yield 3.7780. Now let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. And Mark, good morning. You're looking at the cost of U.S. debt.
Yes, good morning, Fran. Yesterday, the U.S. Congressional Budget Office said that the U.S. debt ceiling will be reached in July. Now, we've talked a lot about the debt ceiling, but many people aren't overly concerned. We've had this many times before, and a bit of politics, and then ultimately we raise the debt ceiling, and it's no big problem. The closest playbook is seen as 2011, where it did cause a bit of market turmoil, but again, we moved beyond it. I want to explain very quickly why it's going to be a much bigger issue this year. So this is the estimated annualized cost of servicing the U.S. government debt pile. And as you can see, it's gone absolutely parabolic over the past year. This is as of the end of January, $773 billion is the estimated annualized debt cost. That's as of the end of January. Yields have been rising massively in February as well over the last couple of weeks. So it's set to probably burst above $800 billion by the end of February, i.e. this number has risen parabolically and is going to continue rising parabolically for at least the moment. $300 billion extra increase over the past year. Debt to GDP in the US is also more than 120%. Now, the comparison people look at is back in 2011. In 2011, servicing the US debt had been steady for some time. It had been much lower than the 2007 peak. Debt to GDP, while rising, was still below 100% of GDP. It wasn't seen as such a material threat to the US economy and its sustainability and its credit rating longer term. This time, though, it's going to be a major, major problem if they do not raise the debt ceiling early. And therefore, I think that even though we've talked about the debt ceiling a lot, I think it's a major underestimated risk for markets come the middle of this year.
All right, such a great chart. Look out for that as we head possibly into a debt ceiling conundrum. Bloomberg and Live Managing Editor Mark Cudmore with the chart of the week. Now, retail sales in the U.S. jumped in January by the most in nearly 2 years, signaling robust consumer demand. Now, the overall increase of 3%, which was above estimates, could actually bolster the Fed's resolve to keep raising rates in the face of persistent inflation. Now, for more, we're joined by Bloomberg's Christina Aquino. Christine, thank you so much for joining us. There's so much going on in the markets. I have to say, I think I wake up, I read Mark Cudmore's note to the newsroom, and today it said, like, there's so much heavy news flow, and the market just wants to believe a positive story.
Absolutely, Francine. And it's really quite interesting because initially it was not a positive story yesterday when we saw the initial aftermath of that retail sales reaction in markets, right? The markets, I think, went with the narrative that, oh no, this means it's going to be more Fed rate hikes, potentially a much higher peak than markets were anticipating. And we saw that initial negative reaction. But then I think that narrative of bad economic news or good economic news, bad news for markets suddenly shifted to good economic news, good news for markets. And I think, this idea that investors are coming to the realization that consumers are perhaps much stronger than they thought, particularly in the U.S., and potentially shield the economy from any kind of slowdown.
But are we just too optimistic? And one of the market points, which we don't usually do at the open, if you look at crypto, Bitcoin up 15% in the past 3 sessions. So it's definitely a risk-on mood overall.
Yeah, it's definitely a risk-on mood for sure. And I think, the question of whether we're too optimistic, I mean, if you look at the year that we've had in 2022, I think there are a lot of reasons for markets to really just want to latch on to any kind of good news in 2023. You do note, for instance, Bitcoin and crypto, again, rallying as a reflection of that. And so I think we're kind of going back to this idea of an everything rally, but then underneath that sort of rally, there's definitely questions over which aspects of this rally is still too frothy, which assets are still kind of vulnerable to that slowdown if sentiment suddenly turns. And of course, we're still looking at kind of these assets that have rallied massively during the pandemic, suffered a lot last year, and are potentially still kind of vulnerable to a shift in sentiment, even if they're now still looking quite positive.
So, Chrissy, I mean, one of the great stories also that we have in the Bloomberg terminal, market's starting to dream of a no landing cycle. I mean, could this be the new thing? Could this be actually sustained? Are there any fundamentals saying that that's what we're looking at?
Well, certainly the consumer sector and the job market, particularly in the U.S., definitely supporting that idea, Francine. I mean, this is one part of the economy that really just keeps wrong-footing markets on the positive side. It keeps surprising to the upside, regardless of the fact that we've seen warning after warning. It's going to be a recession. It's going to be quite a difficult year for a lot of businesses, for consumers and households. But you're really just not seeing that in the consumer sector for whatever reason. I mean, it could be the high level of savings that they've accumulated over the last couple of years, or really just kind of more resilience than we expected. But for whatever reason, it's consumers that are really holding up this no landing hope at the moment, and I think that's what markets are latching on to.
Yeah, and if you look at some of the earnings, so Cisco's rallying, their forecast shows that demand is actually, staying put, it's holding up, and this, again, another surprise from that sector.
Exactly, Francine, because, we've seen other companies in that sector kind of warning about slowing demand, particularly for IT, electronics goods. We've seen several warnings, again, kind of really sending a mixed picture, or painting a mixed picture of consumers at the moment. And so, yeah, I think, Cisco coming out with that kind of read on consumer demand, very encouraging. I think it really depends then on, is this kind of just like pockets of strength, or is it something that's kind of more broad-based? I mean, I know, for instance, that lines out of the Chinese consumer, for instance, a little bit still mixed, because that economy is still kind of getting out of the COVID era, COVID zero policy era, and perhaps we haven't seen kind of full demand getting back up there. But certainly in the U.S. side of things, very encouraging signs.
Yeah, and actually I was reading some of the there are huge stories actually on China. So, we talk about, some of the banks in China, some of the junk dollar bonds pullback that we could see in the next couple of quarters. Like, how does China interplay with the rest of the world right now? How much readership do you get when you write about China?
Oh, lots, Francine. I mean, there's definitely a lot of interest because it still could be quite the wild card in terms of how the global economy plays out this year. I mean, there's been a lot of kind of encouraging news out of China. Of course, it's emerging from, again, that COVID-0 era. They're starting to kind of pick back up in terms of activity. Very, very encouraging in terms of how that's going to play out for the world economy, especially when it gets back up to full speed, but we're not quite there yet. And as you know, the reopening process, it's not a straight line, right? You could definitely see a little bit of setback in terms of, again, a surge in infections and a little bit of caution from consumers and households. So it could potentially be a bigger story for the second half and something that could keep the optimism going through the rest of the year.
Christine, also your thoughts on banks. So first of all, we have Commerzbank getting some 5.8%. I mean, they came out with some pretty good earnings. And then we also see a big buyback or giving to shareholders from Standard Chartered.
Yeah, absolutely. I mean, it's quite interesting because, you know, the buyback story was certainly something that Barclays was hoping to entice investors with as well, but really completely did not work. I think the banking sector very interesting at the moment, just because I think investors are really kind of scrutinizing them for much more beyond the bells and whistles, if you will. You know, I think they're really kind of looking for the fundamentals, which ones are kind of geared more toward resilient businesses and customer sectors versus the others, especially if you're still believing that it's going to be quite a challenging year for businesses and consumers alike.
Christine, there's something else that caught my eye. So Pernod Ricard, this is the French drinks maker, basically posting a wider beat than expected, but also starting this big share buyback. If you don't give back quite aggressively to shareholders, are you going to be penalized in this kind of environment?
I mean, certainly that's been the theme for a lot of the European companies that we've seen reporting at the moment, right? Really, it's been the theme of buybacks and investors looking for that. And again, it could be quite a boon, as we've seen in the case of Standard Chartered, but then as we've seen in the case of Barclays yesterday, it really wasn't enough to kind of convince investors that they're in good shape. And so I think, you know, it's definitely something a little extra as the icing on the cake for a lot of investors that companies are able to do these buybacks. But again, I think it really will be also about the fundamentals, investors really scrutinizing their preparedness should we see that kind of tougher economic environment materialize in 2023.
Christine, thank you so much. As always, Christina Aquino there from our InLive team. Now, we'll have plenty more, of course, on some of these earnings. We also dig into Commerzbank's results. We're just talking about them with Christine, seeing a beat on net income and Standard Chartered's $1 billion share buyback announcements. Both those banks actually climbing at the open. Commerzbank flying 7% higher. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
For 2023, year started nicely, and therefore we believe that we will go much beyond the 1.4 billion which we have showed this year.
What we've printed today is a 15% growth in our top line. That is the highest top line we have had since 2014. A 15% growth in our bottom line, again, the highest that we've had since 2014.
Well, Standard Chartered and Commerzbank's CFOs there on earnings and outlook. Now, both those lenders are climbing this morning, with Standard Chartered actually announcing a $1 billion buyback, Commerzbank lifting its 2023 profit guidance. Well, joining us now is our finance guru, our finance czar, Tom Metcalf, with all of the earnings and all of the financial news. Tom, thank you so much for joining us. When you look at Standard Chartered, it missed estimates, but shares are up because they're giving back. Does a bank now have a choice, or do they just need to give back to shareholders to keep them happy?
Yeah, very positive noises coming out of Standard Chartered. You just heard the CFO kind of saying, hey, this is pretty much a record year. But yeah, no, look, they missed estimates, but shares are rising because you're right. That buyback was bigger than expected. And also in terms of their outlook, their guidance, they're saying, hey, we expect higher return on tangible equity. So very, very positive noises. And I think that's what investors are looking for. You know, they're looking ahead, they're looking at the outlook. How can banks kind of navigate the sort of upcoming economic uncertainty? So,
and there's, of course, all the speculation about whether they're takeover target. They say they aren't. We heard otherwise, and that got, shot down. Are they a takeover target?
Yeah, no, I think so. I mean, look, right now, Fab, who's the reported as the bidder, is sort of under a takeover rule, so they can't really do anything further. But it's fascinating to hear the CFO at Standard Chartered saying we've had no contact whatsoever with Fab. But it's probably not going to stop the speculation going away. And indeed, some people I'm talking to are saying, oh, this buyback increase is very interesting. Maybe they're sort of almost setting themselves up to try and sort of show why they should stay independent, because they can keep boosting these buyouts, et cetera, et cetera.
The other story, Commerzbank. I mean, if you look at Commerzbank, that's like gaining 7%. What did they do so well?
Yeah, I know. It's hard to tell from what the CFO's tone, but it's an incredible quarter for them, an incredible year. So I think they've, they're really benefiting from that higher rate environment. So they're getting bigger profit margins, and they're saying, look, going ahead, it's looking really, really positive too. So Commerzbank, again, for so many years, it's sort of been in the dogs, not doing great, and now really seems to be benefiting from, we're going back to a bit more of a normal rates environment.
And so, but it's interesting to see, so I guess there are two types of banks, the ones that can benefit or run well, the ones that are not doing so well. Like, what actually makes the difference between the ones that also have to fire employees and the ones that are hiring?
Yeah, I think, right now it's coming down to just the type of business you're in. So you can see it with Goldman, you can see it with Barclays yesterday. If you're in the very high risk, very volatile section of investment banking, shareholders just aren't really rewarding that at the moment, rightly or wrongly, whereas retailer banks, they can see very steady income, they see these margins widening, so someone like a Commerzbank, after admittedly many years sort of in the doldrums, is now kind of benefiting from that rate increase.
Tom, I have like 4 stories on Credit Suisse I need to ask you about. So the first one, Credit Suisse First Boston will be owned by the firm.
Yeah.
So this is, I mean, it's quite a big deal as we understand a little bit more about what Michael Klein's thinking.
Yeah, no, exactly. It's kind of, and I think what's interesting is, you get that clarity, you can see what they're going to try to do, and the idea is a very clear reputation, sort of strong reputation, boutique approach, and so very interesting.
And then, Tom, the other story is, of course, about the billionaire, the Georgian billionaire, getting quite a lot of money from Credit Suisse. I mean, this doesn't look great.
No, I think it was like 210 million, so it's a long, long-running legal suit, and basically this Georgian billionaire is saying, hey, you sort of didn't do your fiduciary duty to me. And yeah, Credit Suisse paying up, they just said in a legal filing. I mean, 210 million, so they must have done something.
I mean, 210 million, nothing, yeah. Tom is going to go and hit the phones to try and figure out exactly what happened there. Our Tom Metcalf from the finance team, thank you for joining us today. Now let's get straight to the Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. Fidelity Investments is looking to fill about 4,000 new roles by mid-year, even as rival asset management reduce headcount. The additional positions at the US company will focus on customer service and technology and follows a year of record hiring that took staff numbers to 68,000. Bloomberg understands that Credit Suisse is exiting distressed debt and special situations trading. Sources say the bank is selling assets, including some $250 million of bonds and loan positions as it exits capital-intensive businesses. Meanwhile, we've learned staff at the spun-out First Boston Investment Banking Unit have been told they will all be shareholders in the new venture. This as the bank tries to rally staff to support the planned overhaul. Deutsche Bank is said to be cutting bonuses for staff who inappropriately use messaging services for business communications. Sources say the cuts affect pay still to be awarded for last year. Deutsche is among several banks fined over $2 billion by US regulators over the use of unauthorized communication channels. That's your Bloomberg Business Flash. Francine.
Alice, thank you so much. Alice Atkins here in London. Coming up, Airbus soars after upping its delivery forecast despite striking a cautious tone amid supply chain issues. We break down the latest earnings results live, reporting from the plane makers HQ. That's next, and this is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 21 minutes into the European trading day. The picture across the board, not only in Europe, where we have 20 industry groups that make up the Stoxx 600, all gaining, but also U.S. futures rising. We had benchmarks, of course, in Asia also rising. Investors now appear to shrug off the prospect of higher interest rates following some pretty strong economic data from the U.S. Now, Airbus shares climbing at the open after the plane maker projected higher deliveries for this year and will also accelerate output of the largest models as long-haul travel rebounds. Now, for more on all of this, let's get straight to our Bloomberg senior editor, Benedict Kamel, who's at the Airbus headquarters in southern France in Toulouse. Thank you, Benny, for joining us. It's a really tough job being in Toulouse in February. What's causing Airbus to delay their best-selling plane production target?
Yes, good morning from sunny Toulouse. So behind me here, Guillaume Faury, the CEO of Airbus, has started speaking, addressing the press about the prospects for this year. And as you say, the stock is up quite a bit because people are looking past the delivery targets, past the production targets, rather, for the A320, which they are lowering slightly. And instead, they're looking at the delivery target for this year. They want to hand over 720 planes. That's quite a bit more than what they did last year. Remember, they had to revise that goal twice last year, so fairly aggressive this year. And they're also raising output on the wide-body jets. Those are the 330, the 350 planes, those planes that do the really long-haul journeys. And that speaks to a certain optimism in the industry. Faury said he was frustrated with the slow pace of ramp-up. He said, we need to do more. Apparently, he read his senior manager's The Riot Act a couple of weeks ago and said, the year's not started well. We don't want to end up in a place where we were last year, where we missed our goals. So really the focus and the pressure is on the company to deliver this year after a patchy year in 2022.
So, Benny, very quickly, how's that affecting the outlook and how does it compare with competitors?
So Boeing has, I mean, we're at the start of the year. Boeing had a fairly good January in terms of output, in terms of their deliveries. Airbus had a slow start, and that probably is part of the frustration that's coming from Faury saying we need to do better. The outlook generally, 720 planes, is neither here nor there. It's not super aggressive, but it's not too cautious either. But I think it's something that Faury feels comfortable with right now. They feel they have their production in hand again. They know what they're doing. So there's a degree of confidence there, and you can see it in the stock this morning, which is up quite robustly. So investors seem to like the numbers as well.
Benny, thank you so much. Benedict Kamel, there, Bloomberg's senior editor in Toulouse. Now, we'll also hear from the Airbus Chief Executive Officer, Guillaume Faury, a little bit later this morning, so you don't want to miss that interview. Now, for more stocks on the move this morning, let's also get to Bloomberg's Joe Easton. Now, I see Joe in the morning, and he tells me I look like I'm supporting Chelsea, which I do, and I say, you're very lovely in pastels, Joe.
Thank you very much, Fran. Yeah, I'm still hurting from the Chelsea loss last night, but I appreciate you showing your support there. But look, we're starting with Nestlé, as you mentioned. Now, they are showing a bit of a mixed report today, pushing their prices up around 8% in the last period, according to the company. However, that means that some consumers are already trading down, cutting back, and that's causing some concern that their sales will drop off as the recession takes hold and their margins are squeezed. That stock, as you can see, the maker of Kit Kats, having a bit of a break. It's the second time I've used that line today, and I'll keep using it. But look, we're going to move over from Nesquik over to Cognac. Pernod Ricard in France now. They are reporting a 20% profit jump and announcing a share buyback of around 750 million euros. Asia and US trading very strong for the liquor maker. Still waiting for a bit of the China sales to come back online, where Cognac is very positive in terms of sales. But that stock jumping 4% over in Paris. Then I'm coming closer to home, Centrica here in the UK, the owner of British Gas. Not really news that people want to hear during a cost of living crisis, but they're making £2.8 billion worth of profit for the full year, according to the company. Smashing analyst expectations, sending that stock up 4% here in early UK trading. They're extending their share buyback, giving some of that money back to their shareholders. But the negative side is that some of the household support from the government for energy is actually going to start fading into March now. And there's a bit of a debt pile building with customers that are unfortunately unable to continue paying with their bills. Just going to throw a final one in there, completely left field. This one is over in the tech space. Cinch, we can see it down there, down 11%, but that was down as much as 20% earlier. That's a working from home technology stock trading in Sweden. Their sales continue to decline post-pandemic. That stock getting really hard. Thought I'd put that one in. Keep an eye on Cinch over in Stockholm.
Yeah, great stocks check, but Joe, I was expecting a bit more football. I'm disappointed. I know you'll rectify it in the next hour. Equities reporter Joe Easton. Coming up, European bourses rally, U.S. futures also in the green. Sentiments pretty high. We had some good data from the U.S. We'll talk markets next. This is Bloomberg.
So now you've been at JP Morgan for about 25 years?
Yes.
Okay, so, and now you run one of the most important parts of JP Morgan, which is, I say, is the asset and wealth management business. What actually is wealth management, and how is that different than asset management?
Great question. The two are often used interchangeably, but they have distinctions. The asset management business is where we manage money on behalf of individuals, institutions, sovereign wealth funds, pension funds. We manage them in mutual funds, we manage them in ETFs, we manage them in single stocks, single bonds, hedge funds, private equity, and the like. And that is the heart of the fiduciary business that we run here at JP Morgan. Wealth management is that plus understanding someone's entire balance sheet. So for the individuals where we manage money, we also help them with their mortgage. We help them with a loan that they might need. We help them with their basic credit card. And so wealth management is trying to help someone with their entire life, both their assets and their liabilities, their planning, their gifting, the legacy that they want to leave for their families, the 529 plans they need to prepare to get their kids to go through college. And it's a great insight into people's, entire journey.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Stocks rally as investors downplay the prospect of higher Fed rates. We look ahead to jobless claims out later today for further signals. Standard Chartered announces a $1 billion buyback, while Commerzbank lifts its full-year profit guidance. Shares in both banks soar. Plus, production snarls. Airbus delays targets to ramp up output of its best-selling A320 jetliner as it wrestles with parts shortages. Now, good morning, everyone. Let's take a look at which sectors are actually on the move. They're all gaining. Everyone is rising on the back of some positive data from the U.S. When the data came out, it wasn't such a positive news for equities as traders were, well, I guess cautious about better economic news and what that meant for Fed hikes. Now they're embracing this risk-on mood. European stocks, you can see, gaining some 0.4%. Let's get to the industries and the sectors on the move. I think out of the 20 sectors that make up the Stoxx 600, all of them are gaining. Healthcare pretty much flat, but look at that. Media, basic resources, the top gainers between 1.5% and 1.9% higher. Now, fresh data showed the U.S. economy holding up remarkably well at the start of the year, highlighting robust demand that's actually keeping inflation elevated and heaping pressure on the Fed. Meanwhile, here in Europe, the ECB President Christine Lagarde confirmed she's aiming for a 50 basis point hike in March. Now, for more on all of this, let's get straight to Sean Raitata, Senior European Economist at Vanguard Asset Services. Sean, thank you for joining us. It's pretty incredible, actually, how resilient the economy is so far in the U.S. Are you worried that then it flips on the head and we see something ugly coming?
Yeah, thanks, Francine. I think that is the right point, is we still have to wait until the peak impact of monetary policy tightening comes into play. And we expect that to be later in the year, and therefore that's why we stick to our call that the US will probably have a recession later this year with growth of around 0%. But that said, we do have to acknowledge the risk that the no landing scenario is a bit higher now.
Yeah, I mean, the no landing is what really everyone's talking about. Are there any fundamental points that could make you change your mind and go to no landing?
Yeah, I mean, I think that there's two angles here, right? One is the better growth that we're getting out, but also there is another way a no landing scenario could take place, which is that R star, the neutral rate of interest, is higher than people expect. That means that the monetary tightening we've had so far isn't as tight as people expect, and that means the economy has more room to run, and so the Fed might have to go a bit higher.
Is there anything in earnings that actually makes you worried about the economy? I know we're looking at Cisco, for example, saying, look, demand will stay strong as a positive sign that consumers around the world will be okay. Is there anything that you're seeing that we should worry about?
I think the earnings picture in pockets is slightly weaker, but in general, it feels like what is mirroring the economy in the sense that the data right now is pretty strong, but we expect that to soften, especially as the peak impacts of financial conditions tightening comes into play in a few months.
So, Sean, you're expecting the monetary policy lag to almost last 12 months. I mean, could it come sooner? Could we have if not a sharp downturn, certainly a correction in the markets because of a downturn in the U.S. economy in the next 4 months?
It could come sooner, but what we're seeing right now is financial conditions, although they have tightened, they aren't so tight right now. And then that is the key channel that Powell talks about a lot relative to maybe previous cycles, is markets are much more forward-looking, there's much more forward guidance in the system, and so maybe you get the tightening a bit earlier. That said, I mean, if you look at where the equity market is trading at the moment, where credit spreads are trading, they're still at relatively elevated levels, even with the correction we've had in the past 12 or 18 months or so. And so, you know, we've still got a long way to go, I think.
I mean, there's also the story, which I don't really know what to do with. U.S. Treasury risks a payment default as soon as July. And this is according to CBO. Do you take this seriously? Does it impact your economic forecasts?
I think we have to take it seriously, given the magnitude of the consequences if something like that does happen. But I think from our perspective, what we think about is more long-term. If you look at the CBO forecast, you're looking at deficits widening to an average of 4 or 5% over the next few decades. And that is a big problem for the US because it means, according to the forecast, that debt is rising and rising and rising, and potentially on an unsustainable path, unless there is something changing in the fundamentals of the budget position.
Yeah, and we heard some pretty tough words from the Treasury Secretary, Janet Yellen, in the U.S., saying, look, she sees higher yields in perpetuity if there's not a debt limit hike. Are we really talking about something like that potentially happening, and how do you model it?
I think the main point here is high interest rates does ultimately reduce fiscal space, right? Because that increases debt servicing costs over the long run, and that also makes it more difficult for the Treasury to meet its obligations. So it is a challenge, and I think we've got to get used to higher interest rates, and that also means the Treasury might have to consider how it approaches that as well.
Jean, does the ECB have the right policy? So it's 50 basis points. I mean, they've telegraphed it really with like a landing card. I mean, you can't not get the message. What if something were to change?
We think that the ECB does have the right policy for now. I mean, we have a terminal rate of 3.5%, consistent with, I think, what markets are pricing as well. 50 basis points at the next meeting is potentially on the cards. The truth is, even though growth is weak and we expect a mild recession, core inflation is still rising. It's above 5% now, and it's yet to peak. And until that starts to peak and starts to fall in a significant way, I think it's hard for the ECB to justify slowing or pausing their rate hikes.
Yeah, I mean, it's very clear that we have 3 months of moderating inflation in Europe, and yet almost all officials are hammering home this message that the battle with soaring prices is just not won. When do they start easing off on that message? Like, what do you think they're looking at in terms of data point or inflation level?
It's core inflation, and it's most importantly the services part of core inflation, which is historically the most persistent part of inflation. We're still not seeing that easing yet, although the forward-looking indicator does suggest that we're going to see some easing soon, but it hasn't come in that data, and they're moving to data-dependent model, and so that's what they're looking for.
What happens after the 50 basis points hike? Is that it for a while?
We think they do 25 and maybe another 25 following that to get to 3.5 as a terminal rate. We think that is sufficiently restrictive to get core inflation down over the coming months, and then we'll take it from there. But what we do have also in our call is no rate cuts in the next year or so. We have our first rate cut sometime in 2024, which is slightly more hawkish than what markets are currently pricing at the moment.
Michelle, I mean, the other, and I have to, disclaim that I took a bet on this. It's probably the wrong bet, but do you think the Bank of England hikes one more time, or that's it?
This is a big question, right? We had a lot of mixed data this week. I mean, the CPI print came in a bit lower than expected. Services inflation decelerated, 6.8 to 6%. That's a big fall. At the same time, wages are growing at above 7% in the private sector, which is a big deal. In our view, the data on balance means that the bank don't quite have enough evidence that they're looking for a further rate hike. But, we've got to see what happens.
Okay, so you're a no hike. I mean, I'm not going to take a bet because I already took one with Callum Pickering of Berenberg, but that's it.
I think the balance is that now, because they've made it explicit that, we need further evidence of persistent pressures. So that's a challenge the bank faces.
All right, Sean, thanks so much. Sean Ratata, they're a senior European economist with Vanguard Asset Services. Coming up, we'll be joined by the Chief Executive Officer of Japanese chip maker Renaissance. We'll discuss the semiconductor industry, the booming EV market, and much, much more. Don't miss that exclusive interview. It's next, and this is Bloomberg.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. Earnings season continues.
The chips are down.
Earnings coming in fast and thick.
A slew of bank earnings this morning.
Bloomberg breaks the numbers first.
Numbers coming through from Shell.
LVMH numbers are hitting the tape right now.
We had a very good set of numbers in the fourth quarter.
We feel confident with the guidance we've given.
The situation has changed completely.
With exclusive expert analysis.
Europe's most valuable company. Trending towards the higher end of its historical range.
That can continue. How do I play this into 2023?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open, everyone. 40 minutes into the European trading day. For the moment, we're still holding strongs with European stocks gaining some 0.4%. This is on the back of a pretty good session in Asia, and that's on the back of some positive news with the U.S. data we saw yesterday. Now, the chip shortage has turned into a chip glut, but there are still some companies who say they cannot get enough semiconductors. One manufacturer hoping to capitalize on that demand is Japan's Renesas Electronics, which sells many of its chips to the auto industry with a growing focus on the EV market, where I'm delighted now to be joined for an exclusive conversation by the chief executive of Renesas. He's Hidetoshi Shibata. Toshi, thank you so much for joining us. First of all, give me a sense of how your supply situation is now. How much easier does it get? Is there a glut?
Well, overall, I do believe we are shipping enough chips to the customers across the industry. But having said that, it is true that there are some spotty points where our chips are consumed almost hand to mouth. And that's where we are working very hard on our own and with our foundry partners to really make our supplies incrementally increase.
So, Toshi, have you, first of all, been able actually to, get enough chips from your foundries and contractors in most industries?
Yes.
So that hasn't been a problem. You said in the earnings call last week that inventories for your automotive products remain a little bit below your target levels.
Exactly.
Why?
Exactly. Well, because we thought for the end demand for the last quarter was going to be a little more muted, but contrary to our expectation, the end demand was a little more robust. So yes, we shipped enough volume of our chips to the channel, but the end customers pulled more from the channel. That means the inventory sitting in the channel got a little more reduced than we expected at the beginning.
You've also said that you were always looking at M&A, or you have a list of M&A. Is that going to happen? Is this year the year?
Well, I don't have a crystal ball to give you an answer on that, but it is true we are always updating our list. But I guess as it relates to filling the gaps that we have in our technology offerings, connectivity being one of them, is close to an end. So if we are to undertake a sizable acquisition in the future, it might not necessarily be in the field of traditional hardware semiconductors. We'll see.
Okay, we'll see. What will make you strike a deal? I mean, at the moment, valuations could be quite cheap. I don't know whether currency really changes everything. Is there a level for dollar that you're targeting where you say, right, that's it, I'm all in?
Well, and also there comes in an actionability as a very important decision point. So we're going to have to take into consideration all those elements, exchange rate, and valuation, and also actionability. But what's most important to us is a strategic fit.
Right.
Strategic fit in a sense of technical matching as well as cultural matching. So those two are our priority, number one.
But if you just give me a sense of what kind of company then are you looking for? So you told me it's not necessarily the traditional one. This is an area of growth. So I guess chips may be in some kind of industry that will really take off.
As you can imagine, nowadays, most of the chips, if not all, are being used very closely with software. And our customers spend so much time and energy in either making sure of the system using software or developing their application software. So what we could do a lot better on top of quality semiconductor supply is to make our customers' lives easier by providing all the aids for them to make their own system development easier. So that's the angle we are looking at.
Okay, very clear. So you're also investing in restarting your Kofu factory. Any other factories that you could restart after that?
We are always exploring different options. Obviously, Japan could be one of the options, but given what's happening across the world, we are not limited in looking at Japan as a potential footprint expansion geography.
I know Japan is also looking to work with the U.S. to build some of the advanced, of course, chip capacity at home. Will Japan succeed at that?
I believe so. I believe so. Yeah.
What's the biggest challenge in that? What kind of time frame are we looking at?
Well, just like the case for U.S., Japan has some advantages, but at the same time, some challenges. One being relatively high utility cost. And also, Japan is well known for earthquakes. So we have to put additional equipment to mitigate the risks of the earthquakes. So economics is one of them. And last but not least, the talent pool is going to be a challenge. So we have to work out solutions to address all of them to make a competitive production footprint in Japan.
But how you believe this is very, very important? I mean, how crucial is it to have this advanced chip capacity at home?
Well, it's a very difficult question, but to a semiconductor supplier and designer like ourselves, it's going to be always extremely good to have multiple options, not just within Japan, but across geographies.
It's tough. How much can Japan, for example, reduce, its reliance on TSMC?
Oh, it's big. It's big. Yeah, and it doesn't make necessarily a lot of sense to get away from TSMC for any semiconductor supplier or for any country. So the key here is to, yes, we should work to find a way to better manage the reliance on a single supplier, but at the same time, we should work very collaboratively and in a closest fashion to mitigate all the potential concerns.
I mean, there's also quite a lot of noise amongst lawmakers that Japan should enter the same kind of agreement that we have with certain countries here in Europe, which is basically controlling the exports of some of the advanced chip machinery to Chinese companies. Are you concerned about that? Does it change your company?
For the latter part of the question, I doubt it. I don't necessarily expect a big impact on the way we do business. But certainly, because of all these contentions, China will have to take actions to really mitigate the risks on their end. So what I'm more concerned on being nervous about is a little longer term or midterm ramifications coming from this, China's own initiatives, rather than these contentions and restrictions that are happening in front of ourselves now.
All right, thank you so much. Very clear, and thank you so much for joining us here in the London studio. That was Hidetoshi Shibata, Renesas Chief Executive Officer. Now let's get straight to the Bloomberg First Word News with Alice Atkins. Hi, Alice.
Hi, Francine. Germany's airports will come to a near standstill on Friday, adding to a week of disruption for air travellers. A one-day walkout by the labour union Verdi will hobble operations at 7 airports, including the country's largest in Frankfurt and Munich. Lufthansa flights saw widespread disruptions yesterday after workers accidentally drilled through 4 data cables, bringing down the carrier's IT systems. US retail sales rose by the most in 2 years in January, signalling robust consumer demand that could bolster the Fed's rate hike plans. The value of overall retail purchases increased 3% in a broad advance, with all 13 retail categories gaining, led by motor vehicles, furniture, and restaurants. US stock trades will soon be settled twice as quickly after the regulator said it would shorten the time needed to just 1 day. The move by the SEC aims to address structural issues exposed by the meme stock mania during the pandemic. SEC Chair Gary Gensler says the changes from May 2024 will make markets more resilient and orderly. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alice Atkins, and this is Bloomberg. Francine.
Alice, thanks so much. Alice Atkins here in London. Coming up, we'll look at what's next for Scottish independence after Nicola Sturgeon's shock resignation. That's next, and this is Bloomberg.
should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
This is Bloomberg.
Welcome back to the Open, everyone. 52 minutes into the European trading day. We're still holding strong with gains of about 0.4%. The CAC 40, actually, thanks to particular companies that have made and come up with better than expected earnings, is gaining 0.7%. Now, let's also take a look at some of the events we're following today. Another big hitter for American data. We get U.S. PPI at 1:30 p.m. UK time. Following that, we have a ton of Fed officials speaking. At 1:45 p.m., Cleveland Fed President Loretta Mester actually speaks in Florida. A little bit later, St. Louis Fed President Jim Bullard will discuss the U.S. economy in Jackson, Tennessee. Here in London, the ECB Chief Economist Philip Lane speaks at 3 p.m., so don't miss any of those conversations. Now, what's next for Scottish independence? Nicola Sturgeon's shock resignation as Scotland's First Minister has left the future of the movement in doubt. Lizzie Burden explains.
I am announcing my intention to step down as First Minister and leader of my party.
If Nicola Sturgeon can't lead Scotland to independence, who can? As the nation's longest-serving and first female First Minister, she's been a force to be reckoned with. But then, in a complete surprise, she announced she's quitting. So what's next? Under her leadership, the Scottish National Party has dominated every election north of the border since the 2014 independence referendum, turbocharged by opposition to Brexit. But her repeated campaigns for a second independence vote have fallen flat. Now Sturgeon's party is deciding how next to pressure the UK to hold another vote. And with a recent YouGov poll showing that support for both the SNP and independence has waned, opinion is split. Some say a decision to use the next UK general election as a de facto vote on independence, as Nicola Sturgeon had planned, would be a mistake, because it wouldn't be recognised. Whatever direction the nationalist movement takes, Nicola Sturgeon won't be the driving force. She's handing over that hot potato to her successor, saying she won't stand in the way.
Lizzie Burden there on Nicola Sturgeon's legacy as Scotland's First Minister. Now, we're also looking at stocks on the move, and there's a ton of that today. We actually have a ton of news with some of the companies that did better than expected, or certainly are giving more back to shareholders. Pernod Ricard, this is the drinks maker in France. I know our Joe Easton was talking about cognac, but also they do this frozen Ricard, which, you know, could come back in popularity. But they came out saying also they'll give back to shareholders. You can see Pernod Ricard getting some 4.5%. The other story is Commerzbank saying this year's profit will be 2022 on rates. They're doing a lot more in terms of forecast. The results really cap the first half of four-year turnaround plan under the chief executive that benefited not only from the rates tailwind on the back of the European Central Bank's effort to contain inflation, but really benefiting from that restructuring. You can see Commerzbank gaining some 7%. And then Standard Chartered, we had a terrific briefing from Tom Metcalf, who oversees all of our finance coverage here in Europe. Standard Chartered, 2.6% higher. We also spoke to the chief financial officer. Shares are rising after they boosted their guidance, but also gave a $1 billion buyback. Overall, stock market is gaining on the back of U.S. data in the U.S. that was better than expected. That's it for the European Market Open. Surveillance Early Edition is up next. We have a couple of big interviews Coming up, we have a full roundup of our UK show. That's at 9:30 a.m. UK time. We'll also be speaking to Alex Salmond. And then the other big interview, of course, questions, we'll speak to a number of financiers on what happens to Credit Suisse. This is Bloomberg.
The innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies, Breakthrough Energy's funded. There's
by mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Stocks rally as investors downplay the prospect of higher Fed rates. We look ahead to jobless claims out later today for further signals. Standard Chartered announces a $1 billion buyback. Commerzbank lifts its full-year profit guidance. Shares climb. And Nestlé posts weaker than expected full-year net profit, while Pernod Ricard posts a wide beat and announces a large buyback plan. Well, good morning, everyone. Let's get straight to the markets. And the market's actually seeing quite a lot of positive news. Not only some of these earnings that are really beating estimates, especially some of the share buybacks, but overall traders embracing the risk-on mood after we had that U.S. data in the U.S. Initially, market wasn't quite sure what to do with it, but now actually saying that, look, it maybe means that the economy will get through it, and we now talk about a no landing. Investors really taking that comfort, not only from earnings, but the resilience in the economy. We'll see if we have that later today as we get more data out of the U.S. So if we look at European markets overall, and of course we need to look at currencies, and for example, The Bloomberg US dollar index, 1,240. But if we look at the breakdown, I do want to spend a bit of time on some of the corporate news that we're watching out for. So let's look at the breakdown, for example, between a CAC 40 and a DAX. Over in France, at the CAC 40, we see Pernod Ricard powering ahead, gaining some 4.5%. If you look at some of the other, not only interest rates led banks, but also some of the earnings overall. Commerzbank also doing especially well, and that's giving a nice little boost to the DAX. Commerzbank saying it expects profits this year to be significantly above their initial target, what they earned in 2022. And of course, these results cap the first half of a 4-year turnaround plan under the chief executive that benefited also from rates tailwind on the back of the ECB's efforts to contain inflation. Now, retail sales in the U.S. jumped in January by the most in nearly 2 years, signaling robust consumer demand. The surprise increase of 3% could really bolster the Fed's resolve to keep raising rates in the face of persistent inflation. Now, we're now joined by Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International. Salman, thank you so much for joining us. Is the market a little bit too optimistic? So I know we had that good figure from the U.S. They didn't quite know how to interpret it, first of all, but can we really see a no-landing scenario?
Sure. Good morning, Francine. Definitely, I think it creates that dilemma for the market that if the demand side is still strong, what will happen to the future inflation prints and of course the implications for Fed policy. I think the market is getting ahead of itself. This tightening was not done on planet Mars. This tightening was done on planet Earth. So and as inflation becomes stickier from now, because the first 3-4 percentage points were easy to get in because of headline inflation, commodities coming down. If you look at core services, ex-shelter, that's where the problem lies, and that may have implication on tighter Fed policy going forward.
And I tend to agree with you that actually you don't tighten monetary policy without an impact, but then you look at earnings and also forward guidance. If you look at Cisco, I mean, they should be seeing it in the data. If there was a downturn, why are we not seeing it in earnings?
So this cycle is unique in the sense because of COVID shock and of course the stimulus which was put in. And there was a lot of fiscal stimulus which came through the system and ample savings. Now this tightening comes through and the lead lag relationships have widened. But at the same time, we have to think about what will the balance sheets do when they start rolling over into these higher rates, which starts to happen in 2024 onwards. So at some point, the markets will have to think about the balance sheet effect of this tightening rather than just the flow.
But so when does this happen? And we know monetary policy, again, is a laggard. The markets seem to forget day in, day out of that. Is it towards the end of the year that we have the full force of the tightening, or could it come sooner?
So right now in the immediate future is that how does the Fed read the strength in the labor market data and, of course, with the some indicators of aggregate demand. We are thinking that they potentially add more hikes to the terminal rate. So you may go to 5.25 to 5.5% or even a bit higher. And then if you look at the refinancing flows, they kick in, for example, for the corporate sector, which has leveraged massively from 2024 onwards. So third quarter of this year is when we think there will be some more significant impact of this tightening, which started last year.
So what does it mean for your positioning in the markets right now? What are you buying? What are you selling?
So we have been on the cautious side, although we have been trying to navigate this cycle. We have been positive on EM, we have been positive on China, where we have a clear-cut trends of turnaround coming through. And we have been cautious on the developed markets because of this tightening. We are positive on bonds, but we have also now starting to be cautious in the short term, given that Fed becomes more hawkish. So right now, it's more about EM in China for us rather than developed markets.
And you believe actually that the China reopening is a global tailwind? Is that because it's inflationary or because it's still uncertain how it plays out?
So it creates positive domestic demand-driven factor for Europe. We've already seen some of those spillovers coming through, although the concern may come in if oil prices start to ramp up quite significantly, because that will change the narrative of headline inflation once again, and that's what we are watching very, very carefully. And another thing we are watching in China is the outlook for the property sector. How does that play out in the next few quarters?
And there were questions, right, about regulators or PBOC or just policymakers in general and how much support they would give that industry. Are you confident now that they are there ready to act and give more support?
I think the support is coming out as to put a floor on the dynamics. So we saw the numbers overnight, which is prices have flattened out month-on-month basis. So it's more to put a floor, and the question is, what is then the next driver of growth in China as the consumer starts to spend money, and infrastructure, for example, spending comes through, the race for renewables. So there are other sources of growth in China which may come through rather than property sector, but it remains to be seen that how big this structural role of property was in driving Chinese growth.
What's your take on emerging markets? And again, just to put everything into context, if the U.S. economy keeps on charging ahead, we could also potentially see a policy mistake from the Fed, and that would have huge implications on emerging markets.
So right now they have, I agree with you, Francine, on that one. In fact, that may potentially become a problem in the next few months if the Fed continues to hike on the back of this data we are seeing. Right now, the emerging markets get a tailwind from valuations and the fact that inflation has been coming down rapidly. So there is this window of opportunity where you can generate those excess returns. But to your point, if the Fed becomes even more hawkish than it is right now, then we will have to think about those valuations once again.
And so in emerging markets, you're, for example, neutral credit, but overweight government bonds. In which regions?
So we are positive on the commodity-facing sectors because of the China reopening. We have also been positive on ASEAN, and for example, Thailand is another one which will be a beneficiary of these reopenings. So it's quite regional dynamics which are taking hold, where we can point out the trend and understand how it plays out, and it's not facing this tightening, if you will, which we are seeing in the U.S.
Is there something else that you're nervous about that the markets aren't quite seeing? I don't know if it's the energy complex, but on these days where we're seeing quite a good rally, what do you look at in terms of data? The debt ceiling in the U.S., that's not priced in.
Precisely. So debt ceiling discussions we are concerned about, obviously, as winter comes to an end, what happens to Russia-Ukraine situation. Of course, this has been a stalemate, but we know things are moving in terms of army buildup. So that's something to keep an eye on, that if it doesn't spill over once again. And of course, the geopolitics between U.S. and China on the back of course, the balloon saga. So that's something to keep an eye on.
Sam, we're just getting some breaking news, and actually you can probably help me put this into context. So China sanctions Lockheed Martin, Raytheon, and Taiwan on the Taiwan arms sale. And we're seeing quite a lot, of course, of, I guess, tensions between China and the U.S., also with, Taiwan Semiconductors. What do you do with a headline like this? Does it, do you take less risk, or do you look through it?
So I think the critical question for us will be to think about that this is a structural decoupling, but it will ebb and flow. But we have to remember that China is very important for the global economy. It's very important for the global financial system, and we'll have to navigate this through. So we are focused on sectors which are a bit further away from this noise, if you will. So, for example, the consumers-driven sector. So that's how we would think about it from a medium-term perspective. But of course, this creates short-term nervousness for investors.
Yeah, but in general, markets have looked through a lot of the geopolitical aspects. If they don't impact a specific industry, how would you even play some of these larger tensions that are very difficult to quantify?
It's about, I think, and I think last year we had, at least for a short period of time, very intense pressure on some asset markets because of rising geopolitical tension. We saw the implications of war as well. I think it's about focusing on sectors, as I mentioned, on which are going to be a bit more immune. So in the U.S., for example, whether it's the non-interest rate sensitive sectors, for example, we have to focus on the small caps, which may benefit from this very strong labor market. So it's about searching for things which are a bit immune to these larger forces, but these forces are here to stay, and as you rightly pointed out, are very difficult to price in the short term.
Salman, thank you so much for joining us. Salman Ahmed there, a global head of macro and strategic asset allocation at Fidelity International. Now, coming up, Standard Chartered announces a $1 billion buyback, while Commerzbank lifts its full-year profit guidance. We'll look at those bank earnings in detail next, and this is Bloomberg.
everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
News breaks. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
What we've printed today is a 15% growth in our top line. That is the highest top line we have had since 2014. A 15% growth in our bottom line, again, the highest that we've had since 2014.
2022 was really a strong year. I mean, the last time that we have showed a similar net income result was in 2010. It is because of very strong revenues, clearly also driven by the net interest rate environment, but also because of a very disciplined cost management.
Well, those were the chief financial officers of Standard Chartered and Commerzbank speaking to us this morning on their earnings. Now, let's get more on bank earnings with Bloomberg's Tom Metcalf. Sometimes I call him the banking czar, sometimes I call him banking editor, but the point is he knows a lot about finance. Tom, if you start with Standard Chartered, so they missed estimates, and actually at the end of the day, the shares are up because they're giving back to shareholders because they don't want to be a takeover target.
Yeah, well, exactly. That's certainly one interpretation I've been hearing. But yeah, no, in terms of Standard Chartered, interesting set of results. They did miss those estimates, but that buyback seems to be being received very well. And also their guidance saying that 2023 is going to be strong, 2024. So they've raised their sort of return on tangible equity. So broadly, I think shares in London were up about 3% last time I checked. So yeah, you can take that as a pretty positive Q4 for them.
And Commerzbank, I mean, Commerzbank is like flying off the shelves in terms of share prices, gaining some 7% at the moment. And of course, this is, I mean, they've had 4 years of restructuring. So I don't know how much this is raising rates from the ECB and them just coming up with a good plan.
Yeah, I think the timing's been great for them. And we just heard from their CFO, right? And I think, rare to hear such a positive German banker. So that was quite entertaining. But no, look, it's all about the interest rate story. And as you say, they've been going through this restructuring. And happy days, they got that kind of tailwind from this rising rate environment.
Now, Tom and I are also obsessed about Credit Suisse, and I have to say that it's never dull.
Always.
Credit Suisse. So we have 2 or 3 stories that we need to talk about today. First of all, what do we know about Credit Suisse First Boston?
Yeah, really interesting reporting from Gillian Tan in New York. Basically from inside the room, they had this big town hall, and you had Michael Klein go into these various Credit Suisse or CSV, FB employees saying, look, you're all going to have a stake in this business. You're all going to be shareholders. Bonuses are terrible, 2022. I'm going to change that. We're going to be profitable straight from the first moment. And as a result, we expect bonuses to be better. So really making a big effort to try and improve kind of morale. Yeah. And, he's positioning it as sort of a super boutique. So, they're going to be kind of a big name in banking and kind of really just lean into that deal-making expertise that he's sort of hoping to build.
Yeah, and the idea, of course, that you reap rewards, so you eat what you kill.
Yeah, exactly.
It's very investment banker.
So I think it'll be a very Wall Street unit and a very sort of, focused and advisory-led, obviously, operation.
And then, Tom, the other question is like they're paying, hundreds of millions.
Yeah, 210 million.
Because of a Georgian billionaire?
Yes, exactly. So this is a legal case where he's basically saying, you kind of didn't sort of give your correct fiduciary duty to me as a sort of investing client. And anyway, so Credit Suisse came out with a legal filing today, saying they have so far, over the course of this multi-year, very sort of convoluted legal case, paid out about 210 million to him. So huge amounts, and just goes to show at the very, very high end of ultra-high net worth, just how much money there is and how important these clients can be.
Tom, thank you so much. Tom Metcalf there, our finance editor. Now, coming up, we'll have plenty more on the banks. We'll have plenty more on earnings. We also have a little bit of data in the U.S. And then, of course, it's Thursday. We have the UK show. We talk about Scotland. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Airbus shares have hit a 3-year high after the plane maker projected higher deliveries for this year. We'll also speak to the Chief Executive Officer, Guillaume Faury. That's at 10 a.m. UK time, so stay tuned for that. Now, staying with earnings, we have a number of chief executives coming on. We have Guillaume Faury of Airbus. We have Nestlé Chief Executive. Now, they're forecasting that profitability will probably improve in 2023, and that's after some of the shipping costs eroded margins last year and higher raw materials. Now, this is the world's biggest food company. It reported the fastest sales growth in more than 2 decades, mainly driven by higher prices. Now, for more on all of this, we're joined by Bloomberg Intelligence's Duncan Fox. Duncan, thank you for joining us. I mean, we're going to talk drinks and we're going to talk ice cream with Nestlé. This is a good Thursday
2 key things
so far. I mean, why the surprises?
Well, pricing just needed to happen. I mean, we saw probably high 20% increases in raw material costs last year. You've got to pass that through. Part of that was La Nina and part of it was obviously the war in Ukraine. So They've done 9%, give or take, for the year, which is very, very strong. But obviously volume did come off a little bit, as you said, for a few one-offs in Q4. But it's going to be a tough 2023, I think. Certainly the first half, anyway.
Duncan, what about Pernod Ricard? So we were having this off-air fight. This is like very UK versus continental about the virtues of Ricard, which I like, you don't. But actually, people are just drinking everything.
It feels like we need something in our life that's pleasurable, given we've had lockdown for a couple of years, you haven't seen friends and family, and then you've got inflationary pressures coming on. So when you go out, and it's really the on-trade coming back into fore that's pushing these results, people are enjoying themselves and they're paying up for drinks. So Pernod have got their marketing absolutely spot on and giving us what we desire.
There you go. And also a bit of share buyback if you're a shareholder. What I don't really quite understand is that at some point, if you see interest rate hikes, then this will slow the economy. Is there anything out there in retail that you're seeing as saying, like, for the moment we're fine, for the moment the consumer's holding strong, but it could go through a downturn quite quickly?
It's at the moment, I think people want something that gives them some pleasure, and the affordable luxuries are things like drinks. So from Pernod's standpoint, they're going to do quite well, I think, from that. Travel retail is still something like 20% below where it was pre-COVID, and they're growing very quickly there, so that's going to open up, assuming people go on holidays, which, from what we've heard, that's one thing people will still spend on. And then you've got China reopening as well, didn't have a very good new year because of illness, but from February onwards, it sounds like people are going back out and doing what we did last year in terms of meeting friends and family again. So there's a few things there that should help them out in the second half. Pricing probably will still go up, but the same. We are drinking less but better alcohol.
Yeah. But are we changing, actually? Are our tastes changing? And again, I Googled. We have a joke now with Duncan. He's definitely going to go home, at some point and try a Ricard, but, the Perroquet, so I think it's with grenadine. But actually, there's a lot more alcohols, right, that are doing a big push. Is that where it's turning? Like, if you look at all the distillers in the world, who's going to win in 4 years?
You need to have the right innovation. So you've got to have some zero or low alcohol alternatives, and all the spirits companies are doing a lot of work on that, and they've improved the tastes of those dramatically in the last 3 or 4 years. Same with beer as well. Low alcohol beer when I was a student was utterly awful. Now it's not. So I think they've put a lot into innovation, which is allowing us to have zero alcohol product if we want it, but not water or juice. So.
All right. Brilliant analysis, of course. Duncan Fox will have to do a lot more research on some of these hub offerings. He's from Bloomberg Intelligence. Later this morning, we'll also be speaking to the Nestle Chief Executive Officer. He's Mark Schneider, on those results and much more. Don't miss that interview. It's at 10:30 a.m. London time. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Germany's airports will come to a near standstill on Friday, adding to a week of disruption for air travellers. A one-day walk-up by the Labour Union Verdi will hobble operations at 7 airports, including the country's largest in Frankfurt and Munich. Lufthansa flights saw widespread disruptions yesterday after workers accidentally drilled through 4 data cables, bringing down the carrier's IT systems. Now, US stock trades will soon be settled twice as quickly after the regulator said it would shorten the time needed to just 1 day. The move by the SEC aims to add structural issues exposed by the meme stock mania during the pandemic. SEC Chair Gary Gensler says the changes from May 2024 will make markets more resilient and also orderly. Fidelity Investments is looking to fill about 4,000 new roles by mid-year, even as rival asset managers do reduce headcount. The additional positions at the US company will focus on customer service and also technology, and follow a year of record hiring that took staff numbers to 68,000. Deutsche Bank is said to be cutting bonuses for staff who inappropriately used messaging services for business communications. Sources say the cuts affect pay still to be awarded for last year. Deutsche is among several banks fined over $2 billion by US regulators over the use of unauthorized communication information channels. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. We also need to talk about football, but that's maybe offline. This is a picture overall for some of these stocks. European stocks definitely on the rise. Traders embracing this risk-on mood. I'm looking at oil gaining on further signs of higher energy demand. In China, the dollar falling against a lot of G10 currencies. Yen strengthening. Coming up, we talk Scotland and the UK in our UK special. This is Bloomberg.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to Bloomberg UK, a new show with a special focus on the biggest challenges facing the British government, the economy, financial services, and markets. I'm Francine Lacroix here in London. Now, on the show this week, Nicola Sturgeon's shock resignation as Scotland's First Minister has left the future of Scottish independence in doubt. We'll look at what's next for the movement. We'll be speaking with former First Scotland Minister Alex Salmond and Director of Chatham House, Bronwyn Maddox, about what Sturgeon's resignation means for the UK. Plus, British gas owner Centrica posts huge profits thanks to soaring energy prices. We'll be speaking with Dale Vince, founder of Ecotricity, a UK-based renewable electricity supplier, about the energy space. But we start with Nicola Sturgeon's shock resignation as First Minister and leader of the SNP, which has upended the quest for Scottish independence, with now the future of the movement itself in doubt. Well, Lizzie Burden explains.
I am announcing my intention to step down as First Minister and leader of my party.
If Nicola Sturgeon can't lead Scotland to independence, who can? As the nation's longest-serving and first female First Minister, she's been a force to be reckoned with. But then, in a complete surprise, she announced she's quitting. So what's next? Under her leadership, the Scottish National Party has dominated every election north of the border since the 2014 independence referendum, turbocharged by opposition to Brexit. But her repeated campaigns for a second independence vote have fallen flat. Now Sturgeon's party is deciding how next to pressure the UK to hold another vote. And with a recent YouGov poll showing that support for both the SNP and independence has waned, opinion is split. Some say a decision to use the next UK general election as a de facto vote on independence, as Nicola Sturgeon had planned, would be a mistake, because it wouldn't be recognised. Whatever direction the nationalist movement takes, Nicola Sturgeon won't be the driving force. She's handing over that hot potato to her successor, saying she won't stand in the way.
Lizzie Burden there on Nicola Sturgeon's legacy as Scotland's First Minister. Now, we're now joined by the former Scottish First Minister and SNP leader, Alex Salmond, who now leads the pro-independence ALBA party. Thank you for joining us, Mr. Salmond. Whatever your differences with Nicola Sturgeon, you have to acknowledge is that she was a very powerful voice, of course, in the independence movement. Does her departure damage the push for independence?
Well, obviously, it'll go through a new phase, but can I just remind you, when I resigned in 2014, I heard exactly the same voices saying independence was peaked, and what happened was a few months later, the unionist parties, Labour and Conservative, they lost all their seats in Scotland. You know, so support for Scottish independence shifted in 2014 to almost half of the population, and basically it has remained there. Up and down, certainly, but it's remained there ever since. So the next leader who comes in to lead the SNP and the First Minister will inherit a position incomparably better than when I became the First Minister back in 2007.
But do you see a risk now that internal divisions, but also a lack of a strong, obvious successor to Nicola Sturgeon will lead to the resurgence of pro-union political politics and policies, including Labour?
Well, I mean, certainly it's the case that a difference between now and 2014 was that when I resigned, Nicola Sturgeon was a shoo-in to be my successor. This time round, there's maybe half a dozen people who would have a claim, some of the old guard, but some new faces, but they're talented people. And the next leader comes in, and it'll depend entirely on what that leader does. If that new First Minister reunites the independence movement, perhaps through an independence convention, brings in parties like Arbitrage and the Greens who believe in independence, cross-party groups, then the process might be a reinvigorating one. It will depend entirely what happens when the new leader comes in.
Right.
But, you know, the Unionist Party thinking that, you know, what happens to the SNP, any political party who believes that their success depends on what another party does, is doomed for failure. That's what happens to political parties who don't have a clue how to do things for themselves.
Right, but as you've said, this relies solely on the new leader. Who do you think should lead this party? Who do you think has the best chance? So they have to be like Nicola Sturgeon.
Well, there's choices. I mean, if you go for the people who've been around for a while, there's sort of people like Angus Robertson, Hamza Yousaf, Keith Brown, or they could go for the new guard of people coming through. There's people like Kate Forbes, Ash Denham, there's a variety of people in Westminster who are talented. Angus MacNeil, Joanna Cherry, who successfully defeated Boris Johnson in the English High Court on Brexit. So there's a range of talented people. Well, what's going to matter?
Who's your money on? If there's one person that you think...
No, I think it'll be one of the new guard. And what will happen is what will decide whether this is a reinvigoration of the national movement or a setback will be what that new leader does. But can I just repeat that, you know, when I became leader of the SNP way back for the first time, the SNP were, you know, independence was a pipe dream supported by a small number of people. The SNP were a fringe party. The SNP are now the dominant party in Scotland. The national movement is the most powerful force in Scotland. A reunited national movement will be unstoppable. And therefore, a lot's going to depend who is elected and, above all, the approach they take to bring the movement back together.
But what would you consider to be Sturgeon's greatest achievement during her time in office, given actually you're not really any closer to independence since 2014?
Well, her greatest achievement was as a communicator. I mean, Nicola is a first-class political communicator, as was shown during Brexit. Sorry, I beg your pardon, as was shown during the pandemic, I would say, where the messaging from Edinburgh was much, much superior to the messaging from London. And she wins elections. But you're quite right. I mean, her failure has been she hasn't advanced the support for independence further forward than it was 8 years ago. But it was at a high level 8 years ago. So the SNP and the National Movement and the next First Minister are looking for a strategy as well as looking for a new leader. But if that strategy is found, and if it's one of uniting the movement, then the process can be a reinvigorating one. As I say, political parties who think that they need the SNP failure or the SNP indecision as the route to success, any political party that wants to succeed has to do it on their own merits. That applies to the Unionist Party, applies to the party I lead, it applies to every political party, and it applies to the SNP.
So what would you focus on at the moment? Is this actually a good opportunity to focus, all of the energy on independence, and is this a distraction instead of focusing on improving the quality of public services and the performance of the Scottish economy?
Well, the problems that the Scottish Government have encountered recently have been because they've shifted focus onto other issues apart from independence. And the next leader should settle these. I mean, there's problems in the health service and the education system. There's difficulties with some legislation coming, lack of enforcing a commitment, the gender recognition bill. The key to winning independence is to get the focus back on, the biggest issue in Scotland. You're about to talk about Centrica profits. We've got 1 million Scots in fuel poverty amid our land of energy plenty. We have a nation which has been denied the right of self-determination. That's the issue.
So focus less on independence and focus more on these issues. If you also look at the budget deficit in Scotland, it's much higher than the UK's overall. It's much higher than many EU countries, and certainly than the EU's preferred level. What's the right way forward?
Well, the right way forward is to get the focus back on independence. I mean, this impression that the trouble with the SNP's encountered is because they're focused on independence. The trouble the SNP's encountered is because they've been focusing on other issues which have split their party and their movement. Get the focus onto independence, onto the arguments for it. And incidentally, the idea that the most energy-rich country in Europe, which has massive supplies of clean, green, renewable, affordable power coming out of its ears, could produce 5 times as much electricity as it requires, will be in any economic difficulty with independence, is for the birds. Independence will be the key to unlock a prosperous future for Scotland.
What should the new SNP leader do with currency? So would an independent Scotland actually have a new currency and attempt to join the euro, or continue to use sterling and import some of the monetary policy from the rest of the UK?
Well, that's been one of the difficulties that the SNP have had deciding, and I would advise the new leader to opt for a new currency as quickly as possible. Of course, you'll always be able to use sterling, because sterling's an internationally tradable currency, but the most economically advantageous position would be to opt for a new currency as quick as possible. And as far as Europe's concerned, an ambition to rejoin the European Union over the medium term is fair enough, but the immediate priority is to get back into the single market. And the way to do that is through the European Free Trade Association, where the timescale for entry into that is a matter of months, not the years it takes you to get back into the European Union. So I certainly would advocate we should orientate the European policy towards rejoining the largest single market in the world through the European Free Trade Association.
But if you start talking about a new currency, does that not alienate voters that maybe then go to Labour?
Well, if you explain it properly and explain it in the sense that you can keep your assets in sterling if you so wish, so you can keep your pension in sterling if you so wish, there's no difficulty with that. But the advantages of having a new currency in terms of economic flexibility are very, very strong. You've got to remember the UK is now a weak economy. It's a weak economy for 2 reasons. It has low productivity And secondly, it's denied access to the biggest single market in the world on unfettered terms. The way to ensure success for the Scottish economy is to use our high productivity in key industries like energy and to get back into that 500 million single market. That should be the economic priority. It's worth looking, incidentally, that Northern Ireland, which traditionally, as you know, has been one of the most difficult areas for growth in the United Kingdom, because it stayed in the single market after the Brexit deal, has had the best relative economic statistics in history compared to the other nations of the UK. That should be a clue to what Scotland's economic priority should be, and that's rejoining the single market.
Yeah, I mean, there are a couple of numbers. We'll have to get you back on because there are numbers also that we're looking at that are independent, that have questionable statistics on education and the like.
Yes,
Albert Parker, former Scottish.
Interesting, because previously
we'll get you back on.
Northern Ireland's slow growth rate. It's the very fact that there's an argument now indicates the advantage of access to the single market.
We'll get you back on and we'll discuss this at length. The former Scottish First Minister Alex Salmond joining us this morning. Coming up, we continue the conversation, of course, on the impact of Nicola Sturgeon's shock resignation with Bronwyn Maddox, director of Chatham House. That's coming up next, and this is Bloomberg.
The innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies Breakthrough Energy's funded. There's
by mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
Let's continue the conversation on the impact of the shock resignation of Nicola Sturgeon as First Minister. Now, my guest is director of London-based think tank, the Institute for Government. So we were talking, of course, about some of the pitfalls of what that means for independence. We also had a good conversation with Alex Salmond about everything that was coming up, including a possible referendum. Now, we're now joined by Bronwyn Maddox, director of Chatham House. Bronwyn, thank you so much for joining us. I mean, once and for all, do you consider the stepping down of Nicola Sturgeon a setback for Scotland? You're an independent think tank. Like, how should, you know, the Prime Minister view this?
Oh, you've got lots of questions in there. Is it a setback for Scotland? No. Is it a setback for Scotland's independence? At the moment, yes, but that's a movement with an awful lot of momentum behind it, particularly among younger Scots. Is it a setback for Rishi Sunak? Absolutely not. Nor for Keir Starmer. who must be quite relieved this morning, I think, that the champion of Scottish independence has stepped off the stage, and it is not quite clear yet who's going to follow her. Your interview with Alex Salmond broke off at a really interesting point, and you were just getting on to education and indeed health. And critics of Nicola Sturgeon and the SNP would say, look, they've been in control for a long time, and standards of health and education have not thrived under them. And Scotland is really strained to try and pay for those things. And that's where the next focus of the next leader ought to be. And so that's why I gave you the answer I did at the beginning of, is it bad for Scotland? I think it is good for Scotland that the next leader is probably going to have to focus on those things.
But how does it affect overall the political landscape in Scotland? So many observers are now speculating that it plays in favour of the unionist parties, particularly Labour.
I think that's exactly right. At the moment, it is Labour's big chance after many years in the wilderness, if you like. They are the main unionist party capable of picking up votes, and they have, in the past, but not the distant past, voice of Gordon Brown, former Labour leader, big advocate for the union, for Scotland being part of the United Kingdom. So they have a script, if you like. They have a resonance about it, and they have their arguments there. But the polls suggest that the voters that they're picking up are more the ones who are inclined to vote. They're not really making inroads into the independence vote. Yeah. They're picking up unionist voters, and they need to be able to make inroads into the actual SNP's independence vote. And lots of those are younger Scots, and that's really where the battle is at the moment.
Yeah. But why is there a lack of an obvious strong successor? Was this not planned out? And again, what does it mean for the focus? I mean, you have someone who will be relatively new, that actually people don't know that much, we think, and it'll be hard to prioritize.
Well, it will and it won't. I think it is I think it is the right time, even if possibly slightly late. The momentum had gone out of whatever Nicola Sturgeon was arguing. Her fine points were really over in the wake of Brexit, saying, look, many Scots really, really wanted to stay part of the European Union. And then, as Alex Salmond was saying, during the pandemic, where she was just more sure and definitely looked more disciplined than Boris Johnson and then the government in the UK, in Westminster, though actually it's very debatable about whether the results of her slightly different decisions on lockdown made very much difference at all. But she was a very good communicator about it. Yeah. But she'd stalled, and then she lost these two, recent legal battles over the referendum and then over the gender recognition. Mm-hmm. And it's not clear where all this is going. So I think it was the right time.
All right, thank you so much for joining us. Bronwyn Maddox, their director of Chatham House, joining us. And apologies, I keep on losing my voice because there's just so much news out there. Be sure to subscribe also to Bloomberg's In the City podcasts on Apple Podcasts, Spotify, or wherever you get your podcasts today. We talk about Donny and the impact this has on the City of London. We also have a great, terrific story actually about the new city minister and what he's suggesting investors do if they want to sue the Bank of England. New episodes drop every Thursday, so the latest one is out today, and this is Bloomberg.
does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg UK. Now, British gas owner Centrica is boosting its share buyback program after reporting a record profit last year, joining Shell and BP reaping the rewards of soaring energy prices. Well, here to break down the results for us, Bloomberg's Rachel Morrison, who leads our team for power, gas and renewables in Europe. So, Rachel, thank you so much for coming on. I mean, it was an interesting set of results.
Yes, record profits for Centrica, and it comes at a really sensitive time, just 2 weeks after this prepayment meter scandal where they were accused of forcing vulnerable customers to take these prepayment meters. So there's already a windfall tax on companies like BP, Shell and Centrica in the UK, but these are extra profits, record profits at a time when we expect customer bills to go up. So it's really difficult because the company were under pressure to turn around a really difficult time where they were, really not doing very well. But that turnaround has come at the same time as the cost of living crisis. And so it's difficult for them to position these results. And the CEO this morning has been saying, we feel for households who can't pay their bills, but also they have investors to answer to. And that's really what they're trying to do, to sort of give back to those investors that have stuck with them through the hard times. But politically, it does look difficult for them.
Rachel, thank you so much. Of course, fantastic reporting from Rachel and her team on everything energy. Rachel Morrison. Now, to discuss more on the challenges facing the UK's energy sector, we're also joined by Dale Vince, founder of Ecotricity, a renewable electricity supplier with around 200,000 customers. Dale, thank you so much for joining us. You've been described to me as a bit of a do-gooder in general because of your various initiatives on trying to make us greener and fairer. How do you see the energy complex right now in the UK, and what are you lobbying the government to do?
Well, we are seeing record profits in the oil and gas sector. There is a windfall tax, but it's not good enough. There's ironically a renewable energy windfall tax, which is more harsh with higher percentages of tax and less investment get-outs than in the oil and gas sector. Our government have just got this wrong, basically. And as a result, many billions are being made by the oil and gas companies at the expense of ordinary people's energy bills. Bills are falling in our country right now, though, and will continue to fall until the summer as things return to normal. So that's the good news. The bad news is that our government have allowed oil and gas companies to make outrageous profits from this crisis.
I mean, a lot will say, look, they have to do outrageous profits when it's good so that they can reinvest in renewables. Is that fundamentally wrong in terms of analysis? If they're part of the problem, they can also be the biggest catalyst in change.
Yeah, but I mean, the rate of investment globally by oil and gas companies of all of their capital spending is just 5% on renewables. The argument that they need to invest in renewables and so make monster profits is just a diversion. It's just untrue, right? They don't need to do that. They already invest monster amounts of money in oil and gas. They need to divert that money into renewable energy, and that's what needs to happen. And the other thing is, you asked me what I'm lobbying government for. Really, it's the transition most quickly to renewable energy. that we can possibly make. During this crisis, our government have spent £100 billion subsidizing energy bills just to take away some of that pain. That's dealing with the effect, not the cause of the problem. For the same sum of money, we could build all of the infrastructure we need to be 100% green on the grid in electricity and in gas, and that would be a proper investment for our country.
Dale, thank you so much. Too short of time, but we'll have to get back to Dale Vince, also planning to sell Ecotricity to support the Labour Party. That was Dale Vince, founder of Ecotricity and chairman of Forest Green Rovers. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller in New York, Anna Edwards here in London, and this is Bloomberg.
cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
so
destinations.
Functional.
Exactly, value fractional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How
do?
about the Instagram? Can you speak about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Has been that there will be a recession in the U.S. this year. It's clearly not going to start in the first quarter based on all the evidence we've gathered so far.
What the equity market is worried about at this stage is recession, and that we're going to continue to see earnings downgrades on the back of weaker growth.
I think earnings growth at 3% for the next 12 months still looks quite optimistic. It's too early for us to expect equity equity markets to have begun a new leg.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. 2 European heavyweights, Nestle and Airbus, are out with earnings. We will talk with the CEOs of both companies. More changes at Credit Suisse. The Swiss bank cuts risk by getting out of distressed debt trading, while the spin-off of its investment banking tells employees they will all be shareholders of the venture. And a story of brotherhood and betrayal in the crypto industry. The founders of FTX offer dueling accounts of who's to blame for the company's collapse. Welcome to Bloomberg Surveillance, Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And the thinking on Wall Street, Matt, kind of went like this yesterday. Good news is good news once again. And European equities not asking too many questions because that's a change, and just happy to ride on that theme.
Yeah, I was going to say, you know, in response to the sound you just heard from Freya Beamish, equity markets don't seem worried about anything. I mean, we haven't had here a significant drop in equities since last Thursday. So it's been a whole week, even in the face of, you know, CPI that was stronger than expected, and Fed officials coming out and all saying kind of in unison, we're going to have to raise rates further and hold them higher for longer. But that doesn't seem to be freaking anybody out. Take a look at the trade this morning. You can see futures are off just 0.05%, and we closed higher yesterday. So at like just shy of 4150 on the S&P 500, already above the year-end target that we have as an average of the strategists we surveyed. So, and remember, it's only the middle of February. The U.S. 10-year yield continues to come down. It did jump 6 basis points yesterday. It was up over 380. I think 382 was the high that we saw at the end of yesterday's close. Now we're at 378.19. So investors are buying some of that debt, but not really moving the needle a lot. The Bloomberg U.S. dollar index, which had been pretty strong, is coming down a little bit, but still holding at a relatively high level at 1240. That doesn't seem to be a real concern for equity investors. And then Bitcoin. What happened in Bitcoin? I mean, there are a lot of fundamentals that could move, well, technicals, I guess, in a sense, you know, coins being burned, coins being lost, supply being shortened, and then a squeeze could drive prices up this high. But now we're just shy of $25,000 on Bitcoin, 24,659 in the face of a weaker dollar. In terms of what we saw in Asia, it was up, up, up for the most part. If you look at the GMM function on your Bloomberg terminal and put Asia in the drop box, you'll see all green for the equity indexes. For example, I added the Kospi here up 2%. The MSCI Asia Pacific, the broader index, up 0.8%. Sri Lanka was up 2.5%. The Hang Seng was a gainer, but I threw in the CSI 300 instead because it was one of the few outliers that was actually down in the Asia trade overnight. So the CSI 300 down 0.7%, kind of bucking that trend. The yen stronger against the dollar. Here you can see the U.S. dollar falling against the Japanese currency. It can now buy 133.8. So that's also still a relatively high level, but the movement, I think, is very interesting. What do you see, Anna, in Europe?
Yeah, well, dollar weakness through the Asia session and into the European session, possibly helping things along a little bit. That in keeping with the risk-on mood that we saw on Wall Street yesterday, that we talked about, Matt, but also here in the European session this morning. So we're broadly stronger, not by much in London, but by much more than that over in France, up by just shy of 1% on the CAC 40. So strength almost across the board, almost all sectors in positive territory this morning. There are some macro themes to talk about. The euro in focus. We've just talked about the yen, Matt, and of course, dollar weakness is one of the stories today. A little bit of euro strength, not much, but 107, back over the 107 level. We've heard from the president of the ECB, Christine Lagarde. She's reaffirmed expectations around a 50 basis point hike in March. That's the latest thinking being re-established in the markets. This is the media sector here in Europe, and this is the best performing sector this morning, up 1.5%. Relex is the company that's at the heart of that. This is a data company and an events business. The latter of those, we're back in person at events, so that's doing pretty well. But it's also the outlook for the business that helped the stock go higher. And it's the outlook over at Commerzbank that also helps this German giant go higher. 7.7% higher, Matt, for the share price over at Commerzbank. We spoke to the CFO, Bettina Orlopp, a little bit earlier on in programming. She's positive about this year, positive about 2024. It seems the ECB raising rates and the German economy doing better than had been anticipated. And the Mittelstand finding its course better than had been anticipated. That mid-sized business community in Germany, those are drivers there. there. Nestle, though, down 1%. And this is a volume story. Concern about volume here at this business, Matt. We'll talk about this a little bit later on in the program. We'll talk to the CEO. But 2 quarters of falling volumes as prices rise. What does that tell us about the ability of consumers to absorb those prices from here?
All right, we're going to keep an eye on those stocks and obviously talk to some of the CEOs of those companies as well. Let's get back, though, right now to the U.S. economic picture, because retail sales in January jumped by the most in almost 2 years. And home builder sentiment rose in February, even in this higher rate environment. Jobless claims and PPI figures due later will provide the latest readings for Fed officials deciding on the path of rate hikes. I'm going to be paying very close attention to the producer price index. Bloomberg Markets reporter Valerie Teitel has more on what lies ahead amid this, really it's kind of a risk-on mood, even with the Fed saying, hey, rates are going to be higher for longer.
Now, with all these rate rises that the Fed did, they're not having any effect on the economy. Retail sales, what a print yesterday. We have seen some wild swings in the 2-year yield. I just want to recap this for you. Nearly a 25 basis point swing in the last 2 sessions, Matt. It's just been phenomenal. All around this data dependency that we're now hooked onto, every pressure on these data prints is now gigantic. It seems to be that there is a narrative that we're headed for no landing, or we might be just teetering on a cliff of the U.S. economy and the bottom is about to fall out. Either situation is uncomfortable. The 2-year yield has risen nearly 50 basis points since that hot payroll print just a few weeks ago, and we're now pricing in a Fed terminal rate closer to 5.25. But I want to talk about the other data we have out today. It's PPI day today. Will it confirm the big picture that we saw in the CPI? The fact that goods disinflation is slowing and services inflation is remaining sticky. All of this data comes at 8:30 New York time. We also get initial jobless claims, expecting a small tick up from last week's print. And then we also get housing starts. It seems to be that the weakness we saw in housing in December, in November, has started to stabilize. Will we get that hint today? All of this might be overshadowed. We do get the Hawks speaking today. We have Loretta Mester speaking first, and then Bullard later in the day. Will they reiterate that their dots are in the same spot, or have they moved their dots up? We know we get these new dot revisions in the Fed meeting on March 22nd. Will they say anything about their dots moving, or possibly the door being back open to 50 basis points?
Okay, and talking of the Fed, let's talk about staffing at the Fed then, Valerie. The Wall Street Journal says that the Chicago Fed President, Austin Goolsbee, is under consideration to fill the vacant role of Fed Vice Chair. What do we know about him?
He does lean slightly dovish, but the more interesting thing, I think, is that if his replacement isn't found at the Chicago Fed, Loretta Mester becomes a voter in the March meeting, and she is a hawk. So adding maybe another hawk into the mix of voters. We know that this announcement from Biden could come as soon as next week, but Brainerd is definitely leaving the Fed next week. That's what we know.
All right, Valerie, thanks very much. Bloomberg's Valerie Teitel there covering the economic moves and central bank reaction for us. Let's get back over to Europe now, because bank earnings are in full swing there. And there's also some positive news for struggling Swiss lender Credit Suisse, or at least some of the bankers there. Bloomberg has gained an exclusive insight into plans for the lender's first Boston investment bank spinoff. Bloomberg finance editor Tom Metcalf joins us now. So, Tom, it appears that employees of the bank are going to own a piece of this super boutique.
Yeah, exactly. A really fascinating insight from kind of the inside the room for this town hall that they had yesterday. And yeah, we were reporting that Michael Klein basically told everyone in that room, you are going to have shares in this super boutique. And he was saying, look, we should be profitable really from day one. And as a result, we're expecting your bonuses to be pretty good. Obviously not this year, but maybe going forward. So really a big effort there from CSFB to sort of build morale, keep that talent, and hopefully make a success of itself.
Okay, so that's the CSFB story. Other banking news then, Tom, good morning, includes, I've talked about Commerce Bank earlier, but Standard Chartered also. Standard Chartered missing estimates this morning, but increasing guidance, upping the guidance, and announcing a bigger than expected buyback. The CFO, Andy Halford, spoke earlier to Bloomberg.
What we've printed today is a 15% growth in our top line. That is the highest top line we have had since 2014. A 15% growth in our bottom line, again, the highest that we've had since 2014.
The CFO of Standard Chartered there. So why are the shares doing so well then, given the miss? I mean, is it the buyback? Is it something they've said about M&A? What's the story, Tom?
Yeah, exactly. So they did miss, but yeah, the market seems to be responding a bit more to that buyback. So that's $1 billion, and I think analysts were kind of predicting 750 million. So nice jump uplift there for shareholders. And also the bank was coming out and saying, look, 2023 is looking pretty good for us. 2024 is looking pretty good for us. They raised their return on tangible equity sort of expectations. So I think, you know, focusing on the look forward, and as the CFO was just saying there, they're probably quite happy with the print over at Standard Chartered.
All right, Tom, thanks so much for joining us. Tom Metcalf there talking to us about what's going on in European banking. And by the way, in other finance news, back here, Fidelity is bucking the firing trend with a hiring binge. The Boston-based firm wants to fill about 4,000 new jobs by mid-year. Fidelity said the new positions will focus on customer service and technology. Let's get to back to European business, though. Well, it's really a global business, isn't it? Airbus shares are climbing after the plane maker projected higher deliveries for this year. The company also announced it will accelerate output of its largest models as long-haul travel rebounds. Joining us now from Toulouse, France. The headquarters is the CEO, Guillaume Fauré. Guillaume, thanks so much for coming on the program. Really looking forward to this. Talk to me first about the rebound that we've seen in travel, the rebound that we've seen in orders. This industry has been really leading the way in terms of the economic comeback post-COVID.
Indeed, we see a very strong demand for traffic of passengers around the world. There was a very strong demand for cargo during COVID. So the return to good times is indeed accelerating. We see now the opening of China contributing to the global recovery of the sector, and it's now a market where demand is actually stronger than supply.
So, and you know, the supply chain issues have been frustrating, I know, across the industry, in the automotive industry as well, really everywhere. Tell me how that is getting back to normal. What do you expect in terms of the supply chain, especially as you see these increased orders? I'm sure you want to be able to build as many as you can to meet that demand.
Indeed, 2022 has been quite frustrating from that perspective. As I said earlier, we had a very strong demand for our products, and we've not been able to deliver at the rates we had anticipated. We have decided for 2023 to take into account, to face that reality of a very supply-constrained environment, taking an objective to deliver in 2023 720 planes. But we see that for the outer years, the outlook is really good. We've decided to ramp up to rate 75 per month by 2026 on our single-aisle family, the very successful A320 family. But we have also announced this morning that we are taking the rates up to rate 9 per month on the A350, which is close to what we had before COVID, where we were at rate 10. So actually, that's the whole industry, that is growing, that is accelerating, and we are limited by supply chain capabilities.
So increasing expectations, good morning to you, Guillaume, around the A350, but slightly reduced expectations now in the market around the A320, the narrow-body program. Can you give us, is it possible to explain very succinctly who or what is to blame for the supply chain issues that continue to make it difficult for you to satisfy demand right now?
On the A320 family, on the single aisle, we have not changed the ultimate objective of reaching rate 75, but we have slightly postponed the date of reaching rate 75 to 2026. That's still a very steep ramp-up that is challenging for the supply chain given the current situation. What are the main problems in the supply chain? Well, it's a bit across the board, some systemic issues with the availability or the lack of availability of electronic components, chips, that is impacting a lot of suppliers. We've had the energy crisis situation impacting suppliers, a lot of difficulties to find skilled workforce around the world in the post-COVID environment, and the consequences of the Great Resignation 2021. The workforce in aviation is very skilled, It takes a lot of time to recruit, to train, and that's actually what we see happening today. But there are also other kind of problems linked to the logistical bottlenecks that we observed in 2022. It's easing now. So it's a bit of a lot of problems combining each other.
Okay.
That's what we faced in 2022, and we start from the assumption that's also what we will be facing in 2023.
Okay, so that's a list of some of the things that are frustrating the supply chain at the moment, Guillaume. Can I ask you about free cash flow? Some analysts responded a little coolly, a little negatively to your free cash flow forecast today, saying that, well, one analyst describing it as poor. How would you describe the free cash flow forecast? How would you respond?
Well, actually, we posted a very strong free cash flow in 2022, sort of 1.2 billion euros more than the guidance we had at the beginning of 2022 for 2022. So there's a lot of phasing on the free cash flow. More came in 2022. That was more front-loaded. But basically, we are not changing our 5 years guidance that we will be turning net result into cash. We call it cash conversion of 1 on the period. And therefore, it is less in 2023 than it has been in 2022. But over that period, this is designed to be a conversion of 1. So that's basically the effect of front-loaded non-recurring elements and working capital elements that were favorable in 2022 and that therefore will be missing in 2023.
You've had, on the operator's side, Guillaume, the airlines have had a number of big news IT problems. Yesterday, Lufthansa was affected as Deutsche Telekom apparently just cut a cable. Southwest here in the U.S. has had real IT underinvestment, and that caused thousands of cancellations. I noticed that you're bidding for Atos' stake in Avidian, which is a cybersecurity business. What's the attraction there? How important is IT or preventing IT problems to a manufacturer like Airbus?
Well, thank you for making the point. Actually, we are moving from systems to data, to digital, to cyber, to a lot of high-power computing for simulating. So we are transforming Airbus at the moment. We have 2 main drivers, like many other companies. It's digitalization and decarbonization. And on top, we believe digitalization is an enabler of decarbonization. Atos is a historical partner of Airbus. We're working with them on many fronts. And as they are creating Avidian, that is a company that is focused on those technologies, we are very much looking forward to enlarging our partnership with them and potentially also taking an equity stake in the capital of Avidian. So we are working with them. It's the beginning of a process, but we think accelerating in digital, in data, in cyber is absolutely crucial for all businesses of Airbus, and we see this as an opportunity to accelerate in that direction if it makes sense from a financial standpoint.
And Guillaume, talking of processes, you've said that it will take time to cut supplies from Russia. Can you give us some more color on how far through that process you are?
Well, actually, we've gone a long way forward. We are close to having completed what we want to achieve in no longer being depending on Russian titanium. That's something we expect to have completed by the end of this year, beginning of next year, to be completely and fully de-risked. So that's the roadmap we have already shared several times, and we stay on that roadmap.
Guillaume, thank you very much. Thanks for your time. The Airbus CEO, Guillaume Faury, joining us to talk about the numbers and look ahead to the year in aviation. Coming up on the programme, we'll stick with the earnings stories. We'll talk more corporate profits with the Nestlé CEO, Mark Schneider. Questions about volumes for this business as prices have been on the rise. What can consumers sustain? What can they put up with? Plus, Jane Foley joins us, Rabobank's head of FX strategy, to talk about the strong dollar, slightly weaker dollar, all that in the mix. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards out in London. Now, keeping you up to date with news from around the world, here's the first word. A warning from the Congressional Budget Office. It says the federal government would be at risk of a payment default as soon as July if Congress fails to raise the debt limit. House Republicans have threatened to hold off on lifting the debt ceiling until Democrats agree to cut future spending. A China-based former employee of semiconductor equipment maker ASML has stolen crucial data. The breach occurred in a repository that includes details of systems used in making some of the most advanced chips. The U.S. says it is deeply concerned with the breach. And according to several emails, former J.P. Morgan Chase executive Jess Staley, also formerly the CEO of Barclays, engaged in a discussion of Disney princesses with disgraced financier Jeffrey Epstein. According to a lawsuit by the U.S. Virgin Islands, the exchange was referring to young women and girls Epstein was procuring. The territory argues that J.P. Morgan is liable for facilitating the sexual abuse. The bank has said that the allegations are unsupported. Tesla has fired dozens of workers at its factory in Buffalo, New York, a day after employees there announced a union campaign. That's according to a complaint filed with the National Labor Relations Board. It accuses Tesla of retaliating for union activity. The electric car maker has not responded. Here in New York City, Mayor Eric Adams is reconsidering his requirement that city employees work in the office 5 days a week. The problem is that city jobs are going unfilled. The lure of other more flexible employers can be especially strong for city workers. And, you know, the mayor had pushed back against work from home for so long. But one of the problems was, you know, some people can work from home and other employees don't have the ability to. And he felt that that inequity was something that needed to be addressed by having everyone come in. However, it's very difficult to hire across the country these days if you don't allow employees that kind of flexibility. So it looks like he's having to go back on it.
Yeah, I can understand the equity arguments. I suppose the thing is, if you're operating in a tight labour market, as the US is, as the UK is, as many parts of the Western economy are, then the terms under which people want to be employed will kind of be increasingly set by labour, I suppose. And companies can have their views, or employers can have their views on what they want to see. But if the labour market is tight, then that's going to be the driver of things. This reminds me, this is a sort of post-pandemic phenomenon, isn't it, Matt? We'll talk about another post-pandemic phenomenon, which has been higher prices for things. We'll talk about that, price inflation and volumes as a result, with Nestle, the CEO, coming up shortly.
Yeah, no, I'm very much looking forward to that interview. One of two marquee interviews, dare I say, that we have in this program this morning. Nestle CEO Mark Schneider is coming up. That's an interview you don't want to miss, especially in this environment of food price inflation. This company says it's going to avoid raising costs and grow margins. We'll bring you more. This is Bloomberg.
DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth the 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Two European heavyweights, Nestle and Airbus, are out with earnings this morning. We heard from the Airbus CEO earlier this hour. Up next, we hear from the CEO of Nestle. More changes at Credit Suisse. The Swiss bank cuts risk by getting out of distressed debt trading, while the spin-off of its investment banking tells employees they will all be shareholders of the venture. and a story of brotherhood and betrayal in the crypto industry. The founders of FTX offer dueling accounts of who's to blame for the company's collapse. I'm Anna Edwards in London with Matt Miller in New York. More on crypto a little bit later in the programme, Matt. But for now, we're at an interesting point in the market thinking, I suppose. Yesterday was an interesting day. Good news became good news once again. Stocks went higher on good news about retailers' ability to consume. Today, though, futures are fairly flat to negative.
Yeah, absolutely. Well, you know, flat is better than down, right? And we closed yesterday up at 4,100, I think 4,147. So a relatively high level on the S&P, considering strategists feel like we're going to end the year at 4,100. It's interesting to me that we're not going any further down today. If you look at S&P futures right now, they're off just 1/100th of 1%. Investors are buying bonds. That pushes the yield down a little bit, but we closed at a pretty high level in the bond trade yesterday at, I think, 382. So now we're at 378 even on the 10-year yield. There are some great stories on the terminal, by the way, about how yields are really threatening stocks. For example, in 6-month T-bills, you can get like 4.7%, and S&P earnings are yielding just 5%. So it's great competition there. The Bloomberg U.S. Dollar Index coming off just a bit at 1240, also holding at a relatively high level. And though I know we're saving the crypto discussion for later, I'm very much looking forward to the big take story, which is today about SBF's close friendship with Gary Wang, that the latter is now turning state's evidence against the former. But Bitcoin just shot up overnight, $24,641. Maybe it's a short squeeze. Nonetheless, this price is well above what it was before the collapse of FTX and Genesis, so it doesn't look like any of that has deterred investors too much at all. A ton of great news on the earnings front is pushing up individual stocks in today's pre-market. Cisco, for example, a $200 billion internet giant, jumping after an upbeat forecast showed that demand for tech infrastructure is holding up better than expected. And speaking of the internet, Twilio shares surged, set for their biggest gain in 3 months after a forecast-beating profit outlook prompted analysts to raise price targets on what is an internet infrastructure software maker. If you hadn't heard about it, don't worry, neither had I, but it's a $12 billion company. Zillow shares are up after that company reported quarterly revenue that beat estimates as well, helped by a better than expected period for its core advertising business. And then Roku shares are rising as well after the streaming video platform reported fourth quarter results that beat expectations and gave a revenue forecast that was ahead of consensus. So earnings stories, the micro could boost the market today, even as the macro has reigned supreme for well over a year now, Anna.
Yeah, and we're still dealing with both of those things here in Europe then, Matt. The European equity market up by 0.7% this morning. Just a couple of weeks ago, we were talking about a record close on the FTSE. The FTSE has oil and gas companies to partly thank for that. The CAC 40 has a lot of exposure to China and luxury goods companies. And so we see the CAC 40 up by 1.2% today. Looks as if that market is heading for a record close. So that's the red headline across the Bloomberg in the last few minutes or so. Commerzbank up by just over 8%, increasingly gaining this morning. The outlook for the business sounding very strong from the CFO we spoke to earlier on, Bettina Orloff. She was talking about 23 and also 24 looking positive for the business as the ECB hikes rates and the German economy looks more resilient than expected. And here's Nestle. The share price of Nestle down by just shy of 0.9%. This business, though, dealing with a difficult pricing environment, putting up its prices in the last quarter and facing 2 quarters back-to-back of falling volumes. For more on those Nestle results, let's talk now to the CEO of the business, Mark Schneider, who joins us from the company's headquarters in Switzerland. Mark, very nice to have you with us. Thanks so much for coming to join us. So 2 quarters of back-to-back volume declines, that's not something that happens at Nestle very often. You've been putting up prices as many in the sector have been doing. Does that tell us that consumer goods or your business has reached the edge of its pricing power? Is that what that combination of higher prices and lower volumes tells us?
Well, good morning, and thanks for having me. And obviously, we're watching volume development very closely, but we're somewhat less concerned about that second half of the year 2022. There were some lapping issues and also some deliberate choices that we have taken for example, reducing the number of SKUs that acted as a drag on our volume development, but those position the company for a more successful 23 and beyond, and so they were good choices. And we've also seen some normalization in the out-of-home part of our business, where clearly there have been tremendous growth in the first half, and in the second half, we've seen now some normalization here, with levels now on the out-of-home business not seen since the year 2019. So overall, that somewhat mitigated volume slowdown here is not something that we have much of a concern over. As we look now at the year 2023, we're guiding a solid 6 to 8% organic growth and also a margin development in the range of 17 to 17.5%. So very dependable, steady growth and improvement over time in profitability, just as we were saying towards 2025.
Mark, you mentioned their out-of-home demand. I noticed that restaurant demand in North America, that's where you saw volumes coming under pressure. You say you're not too concerned about those volume trends we've seen. Does that mean that we should expect something different from that restaurant demand in North America story in 2023?
Look, this is a pretty volatile time with several trends happening at the same time. So one is that clearly, as a concern over inflation, there may have been somewhat less out-of-home consumption, but the other was that we were also starting to lap now quarters that had already improved at the tail end of 2021, and hence, the whole thing added up to something that was more pronounced. But overall, again, given that 90% of our business is in-home and retail, I think we're well positioned for continued good growth in 2023.
What are you doing, Mark, to cut down on costs and mitigate inflation to consumers? There are smaller companies like Kraft Heinz out yesterday said they don't plan on any more price increases in most areas. And obviously you have to compete with those brands, or consumers will step down if they feel the pinch.
Yeah. Look, that's a valid question, and obviously we've been working really, really hard all throughout the year to shield consumers from the impact of inflation. We've been hit by inflation, just like everyone else around the world, and we've been working hard in our operations to reduce cost, reduce complexity, and also, of course, use our purchasing power to reduce the impact here of inflation. I think we've been successful at this, and the numbers bear it out. Our gross margin decline for the year had been 260 basis points. The underlying trading operating profit margin decline is only 30 basis points. So it shows you that we worked very, very hard inside the company to reduce the impact of inflation on our earnings this year.
Mark, did I hear reported correctly that you're still selling frozen treats in Russia, that you're still selling ice cream to Russians? Because the idea, I think, with the global sanctions crackdown is that if you make it harder for the Russians and they put more pressure on their leader not to do things like invade sovereign countries. So why doesn't Nestle pull out of that country completely?
We have acted completely in line with the announcements that we made last March, and that is to pare down significantly our food and beverage offering on very basic and essential items. So we cut about 2/3 of the SKUs in this country. But as a food manufacturer, we also feel deep commitments to the geography that we're serving. That is something we've proven time and time again in other situations. And there's a reason that medical products and food are exempt from sanctions. And we want to be sure that we're staying close to the Russian consumer.
But ice cream?
Ice cream is part of a joint venture company that is not under our control.
And can I ask what's happened to the facilities that you operate there, Mark? Because some others in this particular space, consumer-facing businesses, have been concerned that as they pull back from Russia, that they risk their assets being seized or in some way being transferred to Russian owners. Is that something that you're feeling the pressure of?
Look, I feel there's been lots of peers pointing out that this is not a time when there is easy choices. Again, even just pulling back to these basic and necessary food and beverage items has not been easy to pull off. And so again, between staying true and serving the consumer that relies on food and beverage products, the regulatory environment in Russia, and then some of the constraints, this has not been an easy path.
Yeah, no easy choices, I'm sure. Can I ask about M&A, about deals that you might do? Mark, you talked about the organic growth opportunities, but are you under pressure to spend some of the money that you have on doing deals? Are shareholders telling you they want you to do that? And if so, what size of deals might you be looking at?
Look, I don't see an immediate pressure here to do deals, and frankly, even if there was, we don't do deals for deal's sake. I think it's important that there's good strategic fit, that there's good cultural fit, and that also the financials, of course, make sense. We've repeatedly pointed out that over the years, we acted in a disciplined manner when it came to M&A. We took the liberty of walking away from deals when things didn't make sense price-wise or when we had concerns over the cultural fit, and that stance will not change. In fact, one of the announcements that we were making today is that we see continued good benefit on the other end, and that is focusing our company further, be that at the SKU level or brand level. And so buying and selling to optimize our portfolio, that has always been a hallmark of Nestle, and we'll continue to engage in that.
Mark, your foods are obviously a vital part of life for mankind. We need to eat to survive. The supplements business has the potential to really improve the quality of life for people around the world. What's the state of that business right now, and what's your outlook?
Yeah, so we've been assembling some leading global brands in the supplements business. We believe in the power of supplementation to optimize people's nutrition. We have seen tremendous surges in demand during COVID. So 2020 and 2021 were blockbuster years for supplements. Now in 2022, growth was somewhat more moderated because you had some lapping effects. But going forward now, and for the post-COVID world, I think we're seeing continued good benefit and organic growth rates in the mid-single-digit rate.
Mark, thank you so much. Thanks for giving us your time this morning. The Nestle CEO, Mark Schneider, joining us here to talk about the numbers and the outlook for the year ahead. Coming up, Jane Foley joins us, Rabobank Head of FX Strategy. What's her outlook for the dollar? Where does she see the euro by the end of the year? Lots to discuss with Jane. The BOJ, obviously a key focus for 2023, with change at the top. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, we've talked a lot about earnings this morning. Let's go back to the macro themes. We're seeing the dollar a little weaker today amid a risk-on mood in markets. Joining us to discuss, Jane Foley, Rabobank Head of FX Strategy. Jane, nice to see you here in studio in London. So risk-on today, at least in the European session, US futures not sure yet, but risk-on in Europe, the dollar a little weaker, but stepping back. Obviously, last year, really strong dollar. That was the theme. We've questioned that in 2023, haven't we? Where are you now in terms of that dollar strength?
Well, the questioning has brought a change in positioning. So whereas last year, maybe up until October, November, the market was very long dollars, began to pair those back, carried on pairing those back into January. And the opposite really true for the euros as people brought into that euro recovery theme. We're now at a position where people are looking at the economic data, the macro events, through a lens of being pretty long euros and not so long dollars. And of course, that changes the tone. So we're seeing a few battles here. I think the clear one is with respect to the Fed. Is the Fed going to be higher for longer? The market's begun to come round to that. In January, clearly the market didn't believe that at all. And that's been a dollar positive thing. But at the same time, I think there is the risk of, recession is possible for Germany this year. And that perhaps means that people are questioning that the length or their long euro positions too.
That's interesting then. On euro dollar, where do we get to there? Because we're at 107. We went up to sort of 110 or so and have come back down as we've seen people go back into the dollar a little bit. So that's more maybe the Fed conversation, whereas the ECB's been maybe a little more consistent there. So where do we head on euro dollar? Do you think there's much more upside, Jane?
I think there could be some downside, actually. I think the dollar could come back. And this depends on, obviously, the strength of US data. I think we saw a sea change really with that payrolls for January. The retail sales, the CPI have all suggested that, actually, maybe the Fed guidance is correct. Maybe the Fed will be higher for longer. Maybe the market has had to adjust towards that Fed view, and I think that could be ongoing. But clearly it's going to be data dependent. But it's our view that Fed rates will be higher, and as the market comes around to that, then it could give the dollar some support.
I'm interested, Jane, first of all, good morning. Thank you for coming in. I'm interested, Jane, in the yen and forecasts from Mr. Yen himself that we could strengthen to 120. Right now, we're hovering around 134, even with Ueda coming into office. What do you expect him to bring to the Bank of Japan, and what kind of reaction will traders have in dollar yen?
Well, I think the market's been learning a lot about the Bank of Japan over the last, 4, 5, 6 months. I think, some months ago they thought, yield curve control will be abandoned in the same way that the Australians abandoned it. Not so, and I think the market's coming round to that, understanding that this is a much slower story, a very different story in Japan, where they're nurturing inflation. And I don't think there's going to be an awful lot of rapid change in the Bank of Japan, and I don't think any new leader would have brought around rapid change, because they've made policy mistakes before. They remember, 20 years ago when they hiked interest rates too early, and then they had to cut them again, and they do not want to do that again. Japan has fought years, decades of disinflation, deflation, and it now sees perhaps a once-in-a-lifetime opportunity to break that cycle, and it doesn't want to get it wrong. Now, that doesn't mean to say there won't be the opportunity to change yield curve control, maybe even a small interest rate hike, perhaps later in the year, but I think that's about as much as we can possibly expect. The market's beginning to accept that. Perhaps we can see a little bit of yen strength into the spring, into the summer, if that seems likely, that scenario. But we've got to view this through what's happening to the dollar at that period of time.
How much of an issue is the infamous yen carry trade that, masters of the universe use to fund their purchases? Is it still the biggest one on, and is it all dollar yen, or do they sell the yen against other currencies?
Well, yeah, you would sell the yen against other currencies if you anticipated, that your yield would be higher. But things have changed. I mean, it used to be back in the day, the yen-Aussie trade, that was a very popular trade. That is no longer such an issue. There is no longer a current account deficit. For instance, in Australia, their yields are no longer so different to those of the US. So things do change, but certainly the yen remains a funding currency.
Jane, thank you very much. Thanks for joining us. Jane Foley of Rabobank, ending that conversation on the BOJ. Lots more to watch as we see the process underway to appoint a new governor at the BOJ. Coming up, we'll talk crypto, a tale of brotherhood and betrayal. The two FTX founders are offering dueling accounts of the FTX fiasco and of who's ultimately to blame. More from our big take story next. This is Bloomberg.
outside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. FTX co-founders Sam Bankman-Fried and Gary Wang are offering dueling accounts of the crypto exchange's downfall and, of course, pointing fingers at others when it comes to who's ultimately to blame. Today's Big Take gives a closer look at this friendship, I guess former friendship, which has turned now to betrayal. Ava Benny Morrison, Bloomberg legal reporter who co-wrote the story, joins us now. And Ava, it's just an incredible story. I read it start to finish and was left even wanting more. So tell us about the reporting, first of all. You actually went to Palo Alto and visited Sam Bankman-Fried at his home.
That's right. So we spent a few weeks digging into this subject and trying to get more of an insight into the friendship between Sam and Gary. I went to California and I sat down with Sam inside his parents' house. He's living there at the moment under house arrest after being granted bail and putting up a $250 million bond. So I spent a couple of hours with him and spoke about his friendship with Gary Wang. Those two started FTX together. They met in math camp. That friendship blossomed through the university studies, and then they ended up becoming these crypto billionaires. So we spoke to Sam, obviously, and then people who went to school with Gary and Sam, went to university with them, and then former FTX colleagues as well.
So, I mean, it's so fascinating that these two incredibly intelligent people were so vastly different, right? I mean, Sam Bankman-Fried is tweeting out every part of his life all the time, or certainly was until very recently. And Gary Wang, I guess, is not a very prevalent person on social media, right? You got access to SBF. I'm assuming Gary Wang didn't want to answer the phone and talk to you. So it's interesting to me when I come down to the line about no one's sure who's controlling who. Is there a possibility that Wang was controlling SBF, or was it definitely Sam like pulling the strings on Gary Wang?
That's an interesting question. I think people inside FTX who worked very closely with them have spoken to sort of the strength and their unusual bond. I think because they had that history together, and you're right, they were like chalk and cheese. Sam had this very large public profile, this big persona, and Gary Wang sort of operated in the shadows. There are barely any photographs of him online. He has very little social media presence as well. But they did work in partnership for a lot of the time in building Alameda Research and FTX as well. So I guess we'll see at trial who will make those arguments about who was following orders from who. We've got a picture of a partnership and a friendship, but Gary has suggested in his evidence to prosecutors already that he was directed to do certain things, so he was following orders.
All right, Ava, thanks very much. Unfortunately, that's all we have time for, but I encourage our viewers and listeners to definitely go online, bloomberg.com/bigtake, to read this story, or if you have a terminal in front of you, you can just type NI Big Take. Tune in as well to Bloomberg Crypto. That's our program that focuses on the industry every Tuesday at 1 p.m. New York time, 6 p.m. in London. That's it for Surveillance Early Edition. Surveillance, the OG, is up next with Tom, John, and Lisa. This is Bloomberg.
You've been an advisor to the President of the United States on infrastructure and manufacturing, but on infrastructure, you've been involved with the legislation that was passed not long ago. Why is the United States infrastructure so terrible compared to so many other wealthy countries?
I have been around U.S. politics like you for a couple of decades and have served a variety of presidents from the different parties. And the attitude in the United States is obviously to keep taxes low and keep the public spend under control. And the word control is interesting, but that stops forward thinking in terms of planning, and therefore the short-termism around our fiscal policies has hurt us. I mean, in essence, infrastructure is a long-term return, and to get a long-term return, putting it into private hands is one way of doing it, but really the public side of life has to be willing to do the forward spend. The forward spend on airports and roads and EV charging stations has to come from the public domain. Now, raising taxes to spend money on infrastructure means you've got to trust the people doing the spending. And I think the public-private model is the way to go there, which is actually create an infrastructure bank that is U.S. public sector owned that has private sector matching funds. I think that sort of breakthrough has yet to occur in the United States. So where we go is tax and spend, which unfortunately one side of the aisle disagrees with.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
There's a lot of things that the market is getting wrong right now.
We were mispriced, I think, for the path of Fed policy. And now I think we're getting back to a more realistic level.
Now the market's starting to think the Fed's going to go further than they are communicating right now.
Some of this rally is chasing. It's the FOMO rally.
We are in an every data point matters type of environment now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The pain trade gets more painful over the last 24 hours. From New York City this morning, good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures right now down 1/10% on the S&P. Yesterday, yields pushing higher. And what happened, Tom? The NASDAQ outperformed.
Yeah,
the NASDAQ year to date is absolutely flying by 15%.
Just nailed there with FOMO. Guess what? It's FOMO Thursday.
Sure.
That's where we are right now. What I'm going to look at, one statistic just to get the morning started here with claims coming up. up and all the rest. On the market, you're missing. We had an accommodation yesterday of 0.50 standard deviations. That's a new high on the Bloomberg Financial Conditions Index, and even as we speak at a 0.44. This is an accommodative market going against Chairman Powell.
You're going to love this note from Marko Kolanovic then, to build on that, Tom. Out yesterday with this quote here. There's an old adage, don't fight the Fed. You've all heard that.
Oh, really?
But this behavior is not just fighting the Fed, but also taunting the Fed, with crypto meme stocks and unprofitable companies responding best to Fed communications. This is the problem it always is. You can nail one call and then get the other call dead wrong. So you can nail the call on the Fed and you can say data's going to be good, Lisa, rates are going to go higher. So what's going to outperform in equities? Tech? I don't think tech's the answer.
Okay, first of all, the point about a stronger economy doesn't edify the reason why meme stocks are outperforming. That is not necessarily a logical conclusion. But to Marko Kolanovic's point, this is something that we heard from Torsten Slok yesterday as well. Does what we're seeing in tech stocks, in meme stocks, actually force the Fed to go further, actually force the hands of all of the no-landing scenarios and get to a different kind of outcome?
There's a real equity story emerging in Europe as well. Record high in France on a CAC 40, record high on a FTSE
I'm glad
in the
you
UK.
bring this up.
We're going to get earnings from Hermes and Air France tomorrow. Hermes so far year to date up 20%. Do you want Air France KLM year to date up close to 35%?
Wow.
Year to date. You've seen some monster gains over in Europe too.
Yeah, I'm looking at Japanese economic statistics. Guess what? Inflation's higher. I mean, that's where we are, and they got some GDP numbers coming out. And I agree, it's not just America that's doing this, and the Europe numbers I think are frankly more stunning.
Next up for this market, jobless claims in a couple of hours' time. Let's whip through the price action for you. Equity futures right now down 0.1%. In the bond market, new highs for the year on a 2-year in yesterday's session. Intraday coming really, really close to 470, then backing away a bit this morning as well. We're down 5 basis points on a 2-year at 458. Maybe you can call that 459. Euro dollar advancing just a little bit, reclaiming a 107 handle. Bramo 107.04 on euro dollar, positive about 0.1%.
Man, and the euro dollar has been so stable, I will say, just kind of bouncing around that particular range. And I am curious where we break out to. Today, what we're watching, 8:30 a.m., the big data dump, including PPI, jobless claims, housing starts, and building permits. With respect to PPI, how much do we get an edification of the disinflation in goods? If we get a repudiation of that, if we get a surprise upside print here with respect to inflation for goods, do we get some sort of more significant response in markets? And I guess the answer is, which market? Today, we get a host of speak from European central bankers, including the Bank of England chief economist Hugh Pill, Deutsche Bundesbank President Joachim Nagel, and ECB executive board member Philip Lane. To me, this is really the big question. We see, yes, 2-year yields in the U.S. reaching new multi-year highs, but also over in Germany at a time when we heard yesterday ECB chair coming out and saying, Christine Lagarde saying, 50 basis points still very much on the table for the next meeting, and then they'll see after that. So how much they really double down in that manner. And today, the Fed speak includes Cleveland Fed President Loretta Mester, St. Louis Fed President Jim Bullard, and Fed Governor Lisa Cook. How do they respond to the meme stock, to the tech stocks that are rallying? And I'm not expecting them to come out and give you some sort of option on Bed Bath & Beyond's, but I am curious, John, whether they feel taunted, whether they feel like they've got to push back a little more aggressively on financial condition easing than perhaps we heard from Fed Chair Jay Powell.
It's a difficult markets call, that's for sure. Lisa, thank you. Joining us now to discuss, Russ Kostrick, Global Allocation Fund Portfolio Manager over at BlackRock. Russ, let's start there. The closing low on the 2-year, I think, was January 18th. Just north of 4%, 4.08%. We're higher by about 50 basis points since then. Over that same period, we've seen the NASDAQ absolutely rip, Russ. What gives?
Good morning, Jonathan. It's interesting because when you think about last year was very driven by rate beta. In other words, the sensitivity of the stock market, particularly growth stocks, and even more than that, the early growth names, to both nominal and real rates. And exactly as you point out, we've seen this move higher in rates, and the NASDAQ is ripping. My guess is the simple answer is you've had a reversal from really extreme positioning at the end of 22, and that hasn't clearly ended yet. You had massive tax loss selling at the end of 22. You had massive shorts in a lot of these names. As people have come into the new year, that pressure is abated. I don't think that can carry us throughout the year. I don't think meme stocks and early growth are what leads us in 23. But a lot of this has been a reversal of that very tough year you had, particularly at the end in 22.
Russ, beneath the radar, really not even reported in the Western press, was Japan GDP. The nominal GDP of Japan was sub 2%. Is that the great miscall in the markets now, is we don't understand the impact of an elevated and more persistent nominal GDP in the United States, and as John Farrow mentions as well, in war-torn Europe?
Well, I think this is actually a really important point, Tom. You ask, why is the stock market up? And let's leave the meme stocks out for a moment.
Yeah,
please. The glass is half full argument is exactly what you're alluding to. So you had a view 3-4 months ago about a hard landing. Let's call that, the economy contracting 1 or 2%. And now you've got a better and better likelihood of either a soft or a no landing. So if you have 1% growth in 23, which doesn't seem outlandish right now, and 3 or 4% inflation on top of that, that's 4 or 5% nominal GDP. That is a much bigger tailwind for earnings growth in the U.S., probably to some extent in Europe as well, that investors were expecting 6 months ago. And that's one of the reasons, probably the right reason, why the stock market has been as resilient as it's been.
Lisa, this is really important. Nominal GDP across a pandemic from a high of 17%. That's a boom economy, fear of missing out. Down to 10%, down to 9%, and nominal GDP in America 7.3% versus under 2% in Japan, and we're wondering why stocks are going up? Well, there's a spirit out there in the U.S., it's irrefutable.
And this really goes to the question, Russ, and I'd love your take on this. How much of the rally that we've seen, the sort of rethink of what we saw last year, is justified based on better than expected economic data?
Well, I think it is justified. Again, I think the stocks can have a decent year. The mystery is less why are stocks up versus why are parts of the market leading that really shouldn't be leading in an environment where rates are still climbing. But I do think we have an environment where, look, we're getting closer to the end of that Fed cycle, and maybe it goes a quarter point more than the market thinks right now, but we're still seeing the end of that process. We do have a better economic outlook with better nominal GDP. None of this means we're going straight up and you chase every momentum stock out there. But I think the reality is, in an environment where you avoid a recession, where nominal GDP is, let's call it 4 or 5%, and rate volatility is probably going to be lower by the end of the year, that's not a bad environment, and it probably leads stocks higher by the end of the year.
Okay, so based on that, how would you play this? Would you basically sell tech stocks, buy the rest, and perhaps not have as much in cash as people expect because this is an opportunity in other assets that people are discounting it too much?
Well, it's probably right now, cash actually doesn't look so bad right now, at least compared to some of the other parts of the curve, just given the fact that you are getting a lot to sit out. But yes, I do think you want to go back to something that is, judiciously embracing risk. Now, I don't think it's all about growth versus value. Matter of fact, in our portfolio, what we've been doing is we've been emphasizing two themes. We're still going for quality, and that's because we're in an environment where, again, the economy we don't think is going into recession, but there will be some deceleration, and we're splitting the difference on the growth value debate. We're going for GARP. GARP is a style, growth at a reasonable price, that tends to do really well when you have an economic deceleration, but not a contraction. So again, I think it's more about picking your spots, having companies with strong cash flow, rather than making these big bets on tech or not tech.
Hey, Russ, great to catch up and break some of this down with you. Russ Kostrick there of BlackRock. TK, to Russ's point, this is not about why equities are up. It's a leadership question. Why is tech leading in an environment where yields are climbing and people are pricing in a higher terminal rate from the Fed?
I would skew to this one word, quality, and people are looking at profitability and persistent free cash flow and putting a premium on it. The mystery to me, on a fear of missing out Thursday, is in the speculative area. It seems almost like a whipsaw of hedge funds and the type. They're in, they're out, they're in. Let me know what they are today. I'm not sure I know.
It was short covering in January. What is it in February?
Dan Ives.
At some point, and we'll catch up with Dan Ives a little bit later, at some point the theory has to shift, doesn't it? Don't you think? You can't keep saying the same things and just keep saying, yeah, it doesn't make sense, it doesn't make sense.
Don't
and then
give
it
away our
carries on
secret.
another
John,
2
don't
months.
give away our secret.
Goes on another quarter.
Okay, so first of all, we're coming up with narratives around something that is very difficult to really pin down. So understanding that sort of blanket statement at the outset. I do think that what Russ said there was fascinating about you want to go back to something that's judiciously embracing risk. This comes on the heels of better than expected data. And I wonder within the tech sector how much people are still riding on this idea of job cuts, allowing growth, allowing some of that profitability, that incredible sort of cash fortress that Tom points out to continue to attract investors. That said, the underlying thesis of the Fed having to go further just still kind of looms out there and continues kind of raising the pressure, the boiling of the frog that raises a specter that perhaps it won't work.
It's encouraged by the January data, for sure. So we've had a blowout payrolls report, 3.4% unemployment, 517,000 on payrolls, jobless claims sub 200K. We get another read on that a little bit later. And then retail sales with a 3 handle yesterday. It's too early to draw conclusions, but if you came into 2023 with a theory, and your theory was that the growth was going to have to decelerate, the Fed was going to back away, maybe we got a pause in March, you had to reassess the probability of that theory, and clearly that probability has shifted some.
To the conversation with Mr. Kostovich, we talked about top line, not inflation adjusted animal spirit, and that's what you saw yesterday in retail sales. Those are nominal numbers. That's the top line number, and it's forget about all the economic babble. That matters at some point.
Equity futures right now down not even 0.1%. Lisa's gone through the day ahead. We'll talk about claims later. Tons of Fed speak. We need to talk to Peter Cheer of Academy Securities about what's happening with 0 days to expiry options.
Absolutely.
After Marko Klanovic of JP Morgan warned about possibly, what is it, Volmageddon 2?
Volmageddon 2.
Okay, Peter's going to define what Volmageddon 2 actually is. He's going to join us in the next hour. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. A warning from the Congressional Budget Office. It says the federal government would be at risk of a payment default as soon as July if Congress fails to raise the debt limit. House Republicans have threatened to hold off on lifting the debt ceiling until Democrats agree to cut future spending. Russia launched a major cruise missile barrage in Ukraine today. The Ukrainian air defense says missiles hit critical infrastructure facilities. They were launched from both the air and sea. Meanwhile, U.S. Defense Secretary Lloyd Austin says that Russian casualties in Ukraine are likely to mount. He called Russian soldiers ill-trained and ill-equipped. China will impose fines on Lockheed Martin and Raytheon for selling weapons to Taiwan. The fines are worth twice the value of the company's weapon sales contracts with Taiwan over the last 2.5 years. Lockheed Martin and Raytheon are also barred from exports and imports involving China. The FBI reportedly searched files at the University of Delaware, which houses President Biden's Senate papers. According to the Associated Press, the material that agents took does not appear to contain any classified documents. The president's legal team was said to cooperate with the FBI. Global news, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number. Blowing through estimates.
These guys are minting money.
With exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
Does this quickly become just a really crappy business model?
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
We look forward to working with our valued allies to ensure that we all do even more to invest in our shared security. We still have much more to do. Even as we rush to support Ukraine in the critical months ahead, we must all replenish our stockpiles to strengthen our deterrence and defense for the long term.
That was Lloyd Austin, the US Secretary of Defense, speaking in Brussels yesterday, just ahead of an important security conference in Munich, Germany. Touching down in Munich, Germany today, the US Vice President Kamala Harris leading a US delegation. We'll have plenty of coverage of that for you tomorrow with Maria Tadeo. Going into all of that, equities look like this on the S&P 500. Futures a little bit softer. No drama, as we often say. We're down about 1/10% on the S&P. Yields come in a couple of basis points on a 10-year, 378.38 after pushing higher over the last day or so. Pushing much, much higher on a 2-year. Very close, very, very close to 470 in yesterday's session after retail sales delivered an upside surprise. We just fell short at 469. We come back down this morning by 5 basis points, Tom. 458 on a US 2-year.
What we're going to do right now, John, is digress here with a little bit of history, which shows the tensions that we see in Europe. Long ago and far away, and for Americans, there is only one event of 1963. But for Europe, it was coming out of the immense difficulties, the Marshall Plan, the late 1950s. And one guy in Germany set up a conference, the Munich Security Conference. He was a resistance fighter. It was a Germany trying to find a way and find a path. And it was basically a meeting where the allies could measure how allied they were. With a brief on Secretary Blinken's trip today to the Munich Security Conference, Tina Fordham joins us now, geopolitical strategist, Fordham Global Foresight. You know, Tina, we don't have to trot out Konrad Adenauer or Willy Brandt of a Germany that desperately needed the Munich Security Conference a million years ago. How badly does Germany need this conference this morning?
Well, Germany needs the Munich Security Conference, and I would argue the U.S., the UK, and the world need the Munich Security Conference. It was great to hear you remind everybody how and why it was founded, and to remind our younger market participants, only a few years ago, these kinds of meetings were dismissed as talking shops. I would argue we're back to an era where the words that are used and the show of strength is actually critical in laying the groundwork for what's going to happen in the coming months and year ahead.
How allied are the allies, and where does President Biden and Secretary Blinken fit in?
It's really important because this conference has one objective only, and that is to communicate a unified front to the Kremlin when it comes to Ukraine. Now, Americans in particular have been skeptical that through winter with higher energy prices and inflation that's hit the European continent even harder than anywhere else, that this unity would prevail. What's really important, I think, and maybe diverging from expectations is that public opinion in the UK, in the European Union member states, is robustly in favor of continuing to support Ukraine. So this is what I want to underscore, and that's despite doubling and tripling of energy bills and the cost of living crisis. So there's really no turning back. We do see mixed messaging, some stumbling, including from Germany on freeing the Leopards as the great campaign went, the Leopard tanks, insisting that the U.S. Send Abrams tanks before. But the broad takeaway should be standing up to Putin and supporting Ukraine.
Tina, I like how you put that there is one goal for this conference, to protect unity to the Kremlin. How does the China debacle that we've seen with the U.S. and China and some of the tit for tat, the potential for some sort of meeting between Tony Blinken and Wang Wenbin of China, how does that sort of play into or potentially complicate that goal?
Well, it's a reminder that everything that the West and the G7 does to communicate about Ukraine has another meaning, which is consistency of position for Beijing. And so, as you rightly point out, these the kind of balloon hostilities that have transpired have been met by some pretty prickly rhetoric from Beijing. And, you mentioned the sanctions response on U.S. tech companies, Raytheon and others. They're not backing down. In fact, they seem to be using the hullabaloo over the balloon, sorry, I just thought of that, in China to kind of poke holes in U.S. capability. So I think there's still a question about whether Blinken will actually have this meeting on the sidelines of the Munich Security Conference as scheduled. And that points to what diplomats say we need on the U.S.-China relationship, which is so-called guardrails, because hopes for the reset that followed the G20 meeting in December are looking pretty fragile now.
So I'll give you some of that fiery rhetoric, or prickly rhetoric, as you put it, from the spokesman of the foreign ministry, whether there's going to be some sort of discussion between Wang Yi and Tony Blinken. He said, the balloon saga tests the U.S. sincerity and capability to properly handle crises and stabilize relations with China. What does it mean to properly handle crises?
To not inflame them. Not that I am a mind reader on the Chinese foreign ministry, but first of all, not to inflame them. The suggestion was that the U.S. overreacted. And then I noticed some weird communications coming from Chinese embassies in Europe about the train derailment in the state of Ohio. So there seems to be some kind of line of attack on U.S. capability. I'm not sure where that's headed, but what it doesn't suggest is that anybody's trying to de-escalate the rhetoric ahead of these meetings, which, as you know, tend to be incredibly well choreographed in advance.
Tina, wonderful to hear from you as always. Tina Fordham there of Fordham Global Foresight on the Munich Security Conference, which begins tomorrow. The relationship between Europe and the rest of the world, and particularly US and China at the moment. The latest news on that a little bit earlier this morning, Lockheed Martin and a subsidiary of Raytheon Technologies added to a list of so-called unreliable entities due to their participation in arms sales, Tom, to Taiwan.
Okay, well, I think it adds up. What I would say is from Tina there were, why do we do that? Why we're doing economics, finance, investment. These are changing tides, John. There were phrases she said I haven't heard in 45 years, 50 years. I mean, this is a huge deal. Now, Blinken's going, right, to the Munich Security Conference.
Well, Lisa mentioned that, and there's a possibility of a meeting between the Chinese delegation and the US delegation, and we'll see. I've got no idea.
These are themes because of the war in Ukraine, and as she mentions the Kremlin, these are themes from another time and place, and I don't think any of us, including me, are prepared.
Well, Tom, what it goes back to, as you know, is the breakdown of globalization over the last several decades. There was a belief for a long, long time that if the West included China, China would become more like the West. That was naive. Some people might call it arrogant. They were wrong, dead wrong. And now what we're seeing, some of the consequences of them being wrong is you have to pull back, and they're trying to unwind it all. Now, can you put the toothpaste back in the tube? I don't know, but they're going to try, and it's going to be expensive.
Let me ask you this, and I'm not asking for an opinion, but just the zeitgeist out there. Is the United Kingdom leading the way here on this bridge of allies? Is from Boris on to Mr. Sunak? Is the United Kingdom leading the hearkening back
It's
to
part
the
of the
60s
leadership.
and 70s?
It's part of the leadership. It's at the epicenter of that group of allies, without a doubt, and has been over the last couple of years. And obviously, Tom, this dates back decades and decades and decades. But that's not going to change with a new prime minister at all. Not at all.
Can I just weigh in on something that you said? This idea of, this really harkens to a new dynamic that will affect markets. John, you say that we've seen deglobalization. Perhaps we've seen the talk of it, but we haven't seen the action of it, and what the action of it will mean hasn't been really priced in.
Yeah, I don't think I said we've seen it. I think we're starting to see the beginning of that taking place, the unwinding of it. And that's going to be a story for us for a long, long time. Futures right now on the S&P, negative 0.1%, live from New York with yields coming in a couple of basis points. This is Bloomberg.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Equity futures on the S&P down about 0.1% on the S&P 500. Big lift in the Nasdaq again yesterday. Year to date, the Nasdaq up something like 15%. This morning, down 0.06%. And the Nasdaq's been rallying in the face of this in the bond market, a 2-year that keeps on climbing. In the last 24 hours, very close to 470. In the bond market, we look like this on 2s, 10s and 30s. Your 2-year down 4 basis points, 458.47 on a 2-year. Call it 459 right now. On a 10-year, not doing much, down 2 basis points or so, 378.57. Ton of Fed speak again today. Mester, Bullard, Cook, all on the dock here. Berenberg's Holger Smeeding weighing in on the role of central banks and saying this: although the past year has been rough, it has become clear since October that markets can rally even with less central bank support. I think, Tom, that is a really important observation.
It's an important observation from someone who just has been a terrific voice for Bloomberg surveillance on Europe. John, I just think it's so important to have Mr. Schmeeding in our studios here today, and particularly true because John holds the longest lunch at an ECB meeting in Frankfurt ever. Why don't you lead off the conversation, because you do know every long lunch in
That's
Frankfurt.
if you can find a good restaurant.
That would be true.
Holger Smeeding knows where they are. Chief economist at Berenberg joins us here in New York. Holger, fantastic to have you with us in the studio. Good morning.
Yeah, great. Good morning.
Let's start with your conversation with clients. When you come to the United States and meet with US clients, can you reveal their perception of Europe right now and how out of sync it might be with reality at the moment?
First of all, the perception has improved a lot over the last 3 months. It's still a bit too negative, I would say, still a bit out of sync, but not as much as it has been sometimes in the past. You know, we had these periods during the Euro crisis when hardly anybody in the US seemed to understand Europe, namely that it would get through it.
Neither did the Europeans, to be fair.
Actually, quite a few did. The further away you were from Frankfurt, the more misunderstandings you often got. But at the ECB, it was always clear, of course, we will not let our currency go under.
Sure.
We just need to wait for the right conditions to finally do this, whatever it takes. So the point is, yes, there is still some misunderstanding as to how Europe works and how Europe reacts to the Putin shock, but it's more open-mindedness now. The key question I get at the moment is, well, okay, the winter was mild, but is that just a mild winter? Is Europe really over the worst of the Putin shock, the gas price shock, the gas shortage risks, or will it all come back in the winter thereafter? That's the key pushback. And our answer is we are probably safe even for the next winter because we are using less gas even in temperature weather adjusted terms, and we've built up the facilities to import more. We are probably fine. Putin's attempt to blackmail us with a gas weapon has failed.
Okay, so that's the question we've asked too. It's great now, it's better now. What about next winter? Is that just about gas from elsewhere? Is it also about coal? How much has coal been a factor in Europe's ability to get through this?
Coal does not play a major role in this, no. First of all, we have a bit of coal. We can probably get coal from friendly nations such as Australia if we have to. And most of it is that, once again, gas. We will likely end this heating season with gas storage at 55% of capacity. A year ago, we ended the heating season with 25% of capacity. That is over the summer. We need 30 percentage points less of gas imports to prepare for the winter thereafter. So yes, we'll be using a bit more coal, but our need to use more coal is not so elevated that that itself could turn into a problem.
I've been shocked how people don't talk about nominal GDP. Japan showing sub 2% nominal GDP in statistics in the last 48 hours. America has a buoyant nominal GDP. We all know that. What about Europe? What is Lagarde's animal spirit, Lagarde's nominal GDP that's the backdrop for her ECB decisions?
Well, nominal GDP growth is, I would say, roughly above normal. We at the moment have, in annualized terms, very little growth. We are kind of in a winter stagnation. The nominal is still probably expanding at a pace of 4 to 5%, which is not too bad if you would have the split of 2% growth and the rest being prices. But at the moment, we have nominal GDP isn't the problem. It's the split between prices, and at the moment, no growth or very little growth, with, of course, the prospect that growth, real growth, is going to come back by the summer at the latest.
And Lisa, the inflation numbers there are not the inflation numbers here. I mean, that's all there is to it.
What, you mean 10%, 9%? Is an incredible amount that hasn't really come down. Maybe peak inflation in the U.S. Less confidence in that, at least over in Europe, although perhaps getting more confidence. I want to go to something that you're talking about, that it has become clear since October that markets can rally even with less central bank support.
Exactly.
How much is this because of the dominance of the real economy in European indexes? That it really hasn't been hinged to as many interest rate sensitive sectors as, say, the US?
That is, of course, a major point. We did not have this huge run-up in tech, some of which was highly levered. And, of course, we have in our economy less importance of the really interest-sensitive sectors, such as over here, the home building sector, the residential sector. But the key point is, it's a matter of confidence often. It's not just liquidity that drives markets. It is, do people want to use the money they have, to buy, for instance, equities, to buy risk assets. So it's not just, is there liquidity around? It is what people want to do with the liquidity. In a situation where central banks reduce the overall liquidity out there, but people become more confident. Look, Europe is actually not such a bad place. Let's buy something there. Equity markets in Europe can rally even with central bank liquidity going down, and the same actually holds for the world economy.
Well, part of this is because China came back online, right? I mean, a significant part of this is the reason why that's really changed the narrative. How much has that been overpriced? How much has that been overplayed, given the increasingly domestic focus of the world's second biggest economy?
I actually think that this China factor plays a bit of a role in market sentiment, but is not the key driver this year. For me, the key driver this year is that we realize all of the major economies are actually more resilient than expected. This seems to even hold for the US, where there is an economic slowdown, but we now have this discussion, will there ever actually be a landing? We still expect a landing, a softish landing, but we see in many European data, in many US data, in data pretty much across much of the world, yes, times are a bit tougher than they were, say, a year ago, but the worst scenarios are not playing out. And the China reopening story is a bit more like the icing on the cake for that, rather than being the, in my view, the underlying driver why we are getting back towards more risk on, or at least less risk off sentiment in markets.
Oliver Schmieding, with immense respect for your childhood and the tumult of Germany coming out of World War II, there's a fear of inflation that was pounded into us in America. I see 7, 8, 9% inflation in Germany. Does the Bundesbank panic at some point?
No, panic isn't the right word. Of course,
the
Bundesbank is very much on the hawkish side and would like to step more harshly on the monetary brakes than many others. That comes out of history. But even the Bundesbank acknowledges that the European inflation is, to a significant extent, and I would say almost exclusively, the result of Putin. This is unlike the US, where we have this domestically generated inflation coming out of the fiscal largesse in the early part of the pandemic. Over in Europe, inflation was a bit on the high side, but starting sort of to peak when Putin started his war. And now the Putin shock, which is largely the gas price shock and the gas shortage risk, the Putin shock drove the economy down, prices up. And what we are now starting to see is the reversal of the Putin shock. That is the weird combination of getting better growth going forward and still lower inflation, which is not what normal economics would tell you. If it's a domestic inflation problem, you need a weaker economy to get inflation down. All we need in Europe is for Europe to digest the Putin shock, and that's what we are doing. And apparently, even with more success than economists like us had expected a few months ago.
Is that an expensive way of saying that Europe's problem's transitory?
Europe's biggest problem is hopefully transitory. That's the Putin problem, not in the sense of the war, that's a separate discussion how long that may last, but in the sense of getting simply used to, okay, there is no Russian gas for us, it's tough, we are adjusting to it, we can live with it, and we will be living without Russian gas forever onwards.
It's interesting to hear you say that phrase, fiscal largesse, because when I speak to European economists, and when we hear from President Lagarde, she says the same thing. What we're experiencing in Europe is different to what you've experienced in the United States. You had too much fiscal stimulus. Yet here in the United States, the administration will often say, it's a global problem. Is it a global problem?
There are two very different aspects here. The one is the US really in 2020 and 21 had far too much fiscal stimulus and had a bit of classical, you could say, overheating economy in the reopening bounce in 2021, and now you have to take that back. Europe does have a significant fiscal stimulus as well, but it is a multi-year stimulus, this Next Generation EU program, which means every single year it may add up like 0.2% to Eurozone GDP, yeah? Year by year by year. And that's exactly the right way to do it. If you want to spend more money, and you have the need to spend more money, don't do it in one rush. If you stretch it out over 5 years, you will actually get something for your money, rather than just higher prices.
Speaking of money, and this is not why we had you here, could Harry Kane actually go to Bayern Munich? Is the great German soccer team going to steal the Tots' best player, the best player in the world?
Well, I must say I'm not into the details of that, but Bayern Munich has a habit of attracting global talent, and they are among the few European clubs who actually could pay the price if they had to. But
go.
again, I don't know anything about that.
No, but that's what will play in the highlight reel, Holger.
Holger bought notes on that.
He did.
Wrote stuff down.
He nailed
Holger,
that.
this was great. Holger, thank you. Always a clinic. Thank you, sir. Holger Schmieding there of Berenberg, the chief economist, TK, on a whole range of issues.
This is what the show is about. Tina Ford and back-to-back with Holger Schmieding. And, you know, this is great.
Holger's meeting with the White House tomorrow.
I learned, I'm sorry, I learned a lot.
To advise on fiscal policy. Didn't we get a date yesterday, a possible range?
Yeah.
For the X date, the so-called X date?
June, I believe, right? Or is it July?
Somewhere in the summer. I thought they gave us a range.
Somewhere in the summer. They gave us a range, and it could be sooner, and the huge deficit. The one issue that I had, and I wish we had more time with Holger, is that the inflationary push in Europe is pretty broad-based, that the core has been accelerating a bit more. So it's not all energy, and there is the wage pressure that you're seeing also over in Europe. So it's sort of how much does the stimulus, the big fiscal spending, also pair with regime change when it comes to the economic paradigm?
It's got a good European story to tell. That's what this is about. Coming to the US.
It's a great European story.
Things are better than you realise. In Europe seems to be the message. That's reflected in the equity market. We mentioned that a little bit earlier. Record high in Paris, France, on the equity index over there. Record high on the benchmark in the UK, the FTSE 100, at an all-time high as well. Futures on the S&P here, down about 1/10%. Coming up, 7:30. Look out for this. Deborah Cunningham, the global liquidity head over at Federated Hermes from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. China is questioning whether the U.S. is genuinely looking to repair ties damaged by the dispute over a balloon. The foreign ministry called on Washington to handle what it calls an unexpected isolated incident. Later this week, the nation's top diplomats could meet at a security conference in Germany. Some new insight for investors on when the federal government will be at risk of a payments default. The Congressional Budget Office estimates it could happen as soon as July if lawmakers fail to raise the debt limit. Now, House Republicans want to hold off on lifting the debt ceiling until Democrats agree to spending cuts. In the UK, the National Health Service reportedly paid about $2.4 billion to private hospitals to help in the early stages of the pandemic. But the medical journal, BMJ, suggests that little burden sharing actually took place. And the findings raise concerns that the NHS wasn't making the most of the resources available to it early in the pandemic. Tesla has fired dozens of workers at its factory in Buffalo, New York. It comes just one day after employees there announced a union campaign. And that's according to a complaint filed with the National Labor Relations Board. It accuses Tesla of retaliating for union activity. The electric car maker has not responded. Air India could almost double what already stands to be the biggest aircraft order in commercial aviation history. The carrier has ordered a record 470 planes from Airbus and Boeing. Air India now says it options to buy another 370 jets. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You're seeing even customers with $100,000 household incomes, companies like Walmart, are seeing more consumers who have that level of household income. Some of the dollar store and even off-pricers, where their average household income they were getting was under $40,000, and now consumers with $60,000 household income are going there. The trade down is real.
The trade down is real. The message from Dana Taussig there, the CEO of Taussig Advisory Group, live from New York, going into a little bit more data a little bit later. Jobless claims 8:30 Eastern Time. Equity futures look like this, down 0.1% on the S&P. Looking maybe to continue the bounce from yesterday on the Nasdaq, where we were positive 0.9% on the Nasdaq in the face of high yields off the back of blowout retail sales data with a 3 handle. We're still trying to make sense of all of this, Tom. A lot of head scratching going on. A lot of painful moments for a lot of people who did not expect this year to date.
Really, to go back to what I, just as a benchmark, the beginning of the pandemic, I put it Valentine's Day 2020. Have we been, to use a word from economics, have we been as bewildered as we are right now? I can't remember when it was like this. And I think maybe it speaks to how rate rises have come in. It's not easy now. We're not near gross accommodation. We're somewhere up there.
It's never easy. But some of the year-to-date gains have been phenomenal. We mentioned the airlines. Air France up something like 35% year-to-date. I've mentioned the US carriers a few times. United up 32, American up 32, Delta Airlines up 19. I mean, this is really phenomenal stuff, TK, that just keeps on grinding higher.
Yeah, I was in L.A. I'm on Sunset Tower.
Tell us a story.
And I'm driving down, and you know how they got banners on the light posts?
Right.
The whole thing down to the ocean, Pacific Ocean, whole thing down to the Pacific Ocean is Paramount banners. Is Paramount banners.
Right.
And it was like they were screaming into Hollywood, pay attention to us. And I don't know if anybody's still paying attention to Paramount. I really don't know what they do.
Did you see what Spielberg said to Cruise?
No.
That Maverick, Top Gun Maverick, maybe saved Hollywood and saved the theatrical rollout of movies. That was the quote from Spielberg. And that's Paramount, isn't it? Top Gun Maverick?
Yeah, Pluto TV, I have no clue.
Well, I've got no idea what that is.
Showtime, they've got their own problems. Paramount Plus, they're the ones that have soccer games I don't watch.
And they have the Champions League and Italian football.
Yeah, the CAC Milan network.
I mentioned this in a break, so I'll share it with you. So over the weekend, I started watching Yellowstone. Fantastic. Okay. Brilliant. I'm late to this, I know, but I started with season 1. So I wanted to find season 1. Season 1 was on Peacock. The latest season was on Hulu. And I couldn't find it on Paramount Plus. And it's made by Paramount.
Okay, excuse me.
Can you make, I don't get it anymore.
Is Peacock Paramount?
No,
they're separate.
They're separate.
Okay, I don't know. Don't look at me like that. He's watching Yellowstone. I'm watching Jellystone. I mean, that's
I'm just trying to figure out. You're sitting there on the TV, just trying to figure it out.
Yeah.
Like, that's kind of the problem right now with all
I
of
would
this.
say it's a big problem. We're going to get a brief on that right now. Geetha Ranganathan joins us now. She's in charge of streaming idiocy at Bloomberg Intelligence. Geetha, how big is Paramount Plus? I mean, we talk about a subscriber blowout, but come on. Are they like to Netflix teens weens? Are they in the game? Where do they fit in?
So Paramount Plus, no, they're nowhere near the scale of a Netflix or a Disney Plus. They have about, we think by the end of 2022, they would have had probably about 55 to 60 million. 2022, they would have had probably about 55 to 60 million